Hello, everyone. Welcome to another stream. So, I hope you had a good Fed Wednesday, which was yesterday. We had the Fed meeting. I didn't have a good day. It was a pretty bad day for me, actually. For my positions, at least, I was betting on the opposite to happen. So, the aftermath of the Fed, let me show you. The aftermath was basically the dollar. Well, it's actually going even lower today. It's pretty interesting to see. So the dollar went down a lot. It was a big candle. In terms of the move, like minus 0.64%, which is it's pretty bad. Or pretty big move. And it's not just the dollar. Stocks moved down. Nasdaq moved down. Gold kind of moved up and then stayed a bit elevated. So if we go to the 1 hour chart, well, we did have a move up on gold, but not really a massive move. Kind of a more tamed move, I would say. So that was on gold. Bitcoin actually did move up a little bit. And oil is flat on the day. Oil didn't do much. So oil is impacted by the Middle East. Oil is not really impacted by the Fed. So this is not a big surprise right there. And yields did a lot. Yields. So here is TLT. Basically, TLT is the inverse of the bond yield. It is the price of the 20+ year Treasury bond ETF. So this thing is going down. You're getting the 2-year, 10-year, and the 20-year that are kind of elevated. Well, maybe not the short end, but definitely the 10-year and the 20-year. So if you don't know about the bond market, the 2-year is the short term, or kind of called the short end, and the 20-year or the 30-year is called the long end of bonds. So 2-year is the short end, 20-year is the long end. So what happened? What happened during the meeting? If we go back to the calendar and we put up the breaking news, let's take a look. So the rate was kept the same, which was expected by the market, and I was kind of expecting that as well for the Fed funds rate to stay the same. But the press conference turned out more hawkish than more dovish than I expected. So I thought it was gonna be a hawkish hold. I did build some scenarios yesterday. Did we just get the yen intervention? I don't think so. Let me see. Let's see. Probably on USD JPY. USD JPY. 5 minute. It doesn't really look like an intervention. It's also not in the Asia session, which is another, or should be another sign of an intervention. Usually when they intervene, they do it in the Asia session. So I don't think it is, but you never know. You never know. Well, this is good for my Swiss yen. It's good for my Swiss yen, which did suffer yesterday. So yesterday we got a move up into drawdown, and now it's sort of back near break even. So maybe it can continue. We shall see. I was talking about the Fed. The Fed rate was kept the same. I was talking about building scenarios. So let's go to Brent. The scenarios were a hawkish hold, a dovish hike, dovish hold and a hawkish hike. So from my research and from reading Brent Donnelly's newsletter, these were the four main scenarios that were kind of gamed for the yesterday's meeting. And for my positioning, the worst one happened, which was a dovish hold. This one. So every other scenario would be kind of good for my positioning, I would say, which was mostly long on the US dollar. But a dovish hold was pretty bad for my positioning. And we got a dovish hold. Now, what does that mean? Well, a dovish hold means that the interest rates were kept the same. So look at the previous number, look at the forecast, look at the actual number. Okay. So interest rates were kept the same, but the press conference was dovish right there. And if we go to the breaking news, if we go to Forex, and if we scroll down, you will see that there was some dovish commentary from Warsh, so from Kevin. It was about inflation. It's not really on here. Okay, so this is it. So Fed's Warsh, we got some encouraging inflation data, and we will be watching over the period ahead. So encouraging inflation data, he's talking about the latest print. Inflation CPI. He's talking about this print, which came in a bit lower than expected. So from what I got out of the whole meeting is that the Fed again wants to play the more dovish card. They really, really want to avoid having to hike interest rates. They are kind of ignoring that the strait is closed again. They're ignoring that the price of oil is continuing to go up. They are ignoring that the elevated price of oil is what led to the CPI going up the last time. And they seem to be focusing on only the last print, which came in lower than expected. That tells me a lot. That tells me that Kevin is going to follow the more dovish route, as did his predecessors. So if you study the Fed, you would notice that the Fed has been more dovish than people thought throughout history. Okay, so whenever they had the path to go more dovish or hawkish, they chose the dovish path. And also that is reflected in the inflation print, where if you go back 4 years, so the inflation has been above target. The target is 2%, mind you. So the inflation has been above target for a long time, 4 years. Can we go back 5 years? No, okay. So yeah, the inflation has been above the 2% target for a very, very long time, which tells you that the Fed is more dovish than expected. Now that doesn't really work so well for my dollar positioning. So that kind of hurts my USD CAD long, because if the Fed is not going to be serious about inflation, and if the Fed is not going to hike interest rates, the dollar could suffer from that. So personally, my game plan is to hold this for now. That's what I've decided, to hold my dollar long positioning up until the next Fed meeting. Because I do personally believe, out of all of the data that I'm seeing, I do believe that the CPI will be elevated on the next print. So let's see, when are we getting the CPI print? So we're getting the NFP next week. Okay, so the next CPI print is going to be on August 12th, which is going to be in 2 weeks. And I'm waiting for that. The PPI is then on August 13th. That should be pretty important. Also, let me check. Do we get the PC price index today? Yes, we do. So at 1430, we get the core PC price index. But this should be lagging. This print should be lagging and should happen or should print according to what happened previously when the strait was open. But now the strait is closed again. Oil is elevated, so I'm discounting this one. I don't care about the PC price index. I would like to see the CPI and the PPI. I think the CPI and the PPI can actually push us through on my USD CAD, and that we can go up a bit, or at least maybe go up above break even, go into profit, and then maybe I can close my position right before the Fed meeting in September. Because from what I gathered by listening to Kevin speak and by summarizing the whole conference and by looking at the price, just look at the long end of the bonds. So this thing hit new highs almost. I think the 30-year yield has hit new highs. So the market is saying basically the Fed is more dovish than expected. The Fed is not taking inflation seriously, and we're getting another dovish chairman. That's how I'm summarizing this. So I would not be surprised if Fed Watch tool. I would not be surprised if we get a dovish event on the 16th of September. And also the pricing has changed. So yes, the market is still pricing in a hike, but now a hold, the probabilities for a hold have gone up as well. So that's my current game plan. I haven't really had a lot of time to think about this. So it's subject to change. But for now, I'm still gonna be positioned long on the US dollar, at least until the next CPI print, because I think the next CPI print comes out hotter than expected, which brings us up a bit on USD CAD, and then I'll probably look to exit before the 16th of September, because on the 16th of September, I think we get another more dovish event. I don't think they hike. Even if the CPI prints higher or hotter than expected, I still think that they won't hike rates. Just sort of the story that I received from listening to the event yesterday, and it was a big one. It was a really, really important event. Looks like Kevin has decided to follow kind of what Trump is thinking and be more dovish. Plus, he was very neutral when it came to forward guidance, but just the way that he was dodging the questions about inflation, because he kept getting asked by the reporters, inflation is elevated right now. Okay, just move my screen a bit. It almost fell out of my or from the table. So he kept getting asked by the reporters, what do you think about inflation? Why didn't you hike right now? Will you hike on the next meeting? Inflation is clearly elevated. Oil is raging up. Strait of Hormuz is closed. There's a conflict in the Middle East. The conflict is escalating. And he kept dodging the question. So he kept dancing around the question, which in my interpretation is very, very dovish. So yeah, it kind of sucks for my positioning. It was pretty tough to watch yesterday, to watch the conference, but that's trading. My win rate is below 50%. So you'll have good times, you'll have bad times, you'll have break-even times. Gabe's welcome. Hyper, welcome. Jay, where's Nick? Nick is coming. So Nick is coming in, I think, 2 hours. We're doing a longer schedule. So we're doing a longer stream schedule, which spreads out the stream not just in the US session, but also in the London session. And we're looking to maybe even expand it into Asia session as well if we find enough presenters. I'm going long on the dollar. You could get a better price now for sure. Aussie dollar is not bad, so Aussie dollar seems to be a good sort of a good opportunity to buy. Although it's pulling back now, it's pulling back quite a lot. Yeah, this thing is pulling back. I'll stay with my thesis for now. I'll stay with the thesis for now. If I get stopped out, that's fine. That's why stops are in place. Okay, but I still think that the raw thesis is correct, and the raw thesis is this: we go to Hormuz traffic. And you can see the latest number is July 23rd, and we have had pretty much no traffic. Trade volume, almost zero. Very, very little ships and very, very little volume coming through the strait. So, in my opinion, oil goes up. Oil goes up even more, maybe to 100, which pushes inflation up. It makes inflation go hot as well. Okay, we can check trueflation. Trueflation. Let's take a look at that. Is this just the CPI? I'm not gonna log in. So yeah, that's what I'm betting on. Shorting bonds. Sucker's ready to blow. The margin calls going out. Gold. The Fed lost control. Now we're getting 10% trades. GJ crash. I know the reason. I can't remember which bank report I read, but it was written that the MOF might not continue with traditional interventions no more. They might test waters by gradually buying yen and selling USD to see how the market reacts. Could be. Well, they have a couple of tools at their disposal. When we're talking about the Japanese government, they have first intervention, second hike interest rates, third GPIF, which is pension funds. So they have a couple of things that they can do. That's my bet here. That's why I sold Swiss yen. We do have a BOJ meeting scheduled for Friday. So for Friday, we're getting the BOJ policy rate. They could come out with a surprise rate hike. It could happen. There's not a high chance, but it could happen because the yen has lost a bunch of value, and that's definitely not been good for the economy or the Japanese businesses or citizens. So they may want to do a surprise rate hike. But the third thing that I'm betting on with the pension funds is something that can push the yen up as well. So the Japanese government has ordered the pension funds to basically sell foreign and buy domestic. So sell US bonds, buy Japanese bonds. And the effect of that should be bullish for the Japanese yen. So I'm betting on this third thing to definitely happen. And if we get an intervention or a interest rate hike along the way, well, that could help a lot as well. GPCAD, I'm long GJ. I expected Fed was dovish hold. Well, yeah, personally, I thought that was gonna be the least amount of chance for that to happen, but it happened, and that's the markets. Wars can try to be dovish, but at the end of the day, if inflation is rising, there is no choice but to hike rates. That is correct, and the Fed will hike rates if inflation goes up drastically. But most of the times in the past, they were way too late to the party. So instead of hiking rates prematurely, or kind of now as inflation is elevated, they usually wait for it to go up a lot more. Okay. Also, just a second for me to grab a glass of water. So, yeah, looks like it's going to be a dovish Fed. Looks like they don't really care about inflation as much as I thought, and looks like Kevin is not going to hold up to what he mentioned at the first meeting, where he was very strong, very hawkish, signaled inflation as an issue. So that is getting walked back now. Okay. Plus, he mentioned that the last print was lower, which was encouraging. That's I would say that's a silly statement to say, because the reason for the spike in inflation is the Middle East and the closure of the Strait. And that has happened once again. So the numbers are telling you like this is just going to go up. The numbers are telling you to basically ignore the last print. What else did I want to do? Bank of England in 10 minutes. We will see. Personally, I'm not trading the pound right now. I don't think that there's going to be much from that meeting, so I can't really help you on that front. I don't think we get a rate hike from the BOJ. I don't think so as well. I don't think it's going to happen, but if it does happen, it's going to help me a lot. For beginners, how much initial capital is best? Well, if you want to do trading on the side as a side business, you can start with a couple of $1,000, let's say. Kind of 5K would be optimal to start with, I would say. But if you want to do trading full time, 100K minimum, 100K USD minimum. And I'm saying real capital, not in prop firm capital, because prop firm capital is fake. And you only get a 10% drawdown, so that doesn't count. Marco, long USD CAD as in long term, still expecting rise in the dollar. Yeah, still expecting it for now. I haven't really thought it through that much since yesterday, but I'm still betting that the CPI prints hotter than expected, so I will keep holding it for now. And again, then I may close it before the meeting in September, because clearly the Fed is more dovish than expected. Good time to DCA in metals? No, I wouldn't say so. GP CAD has been weakening. Well, that does help as well. But the main story behind my long USD CAD position is that, so the main story behind it is the dollar strength, which I'm betting on. I do want to mention, if you want to get the edge finder, there's still, let me just send the link to James. Let's go to plus, copy. Let's go to the Discord. Okay. So the edge finder is still on sale, 45% off. It is the biggest sale of the year. It is the summer sale, and you can get 45% off with the code Marco on the edge finder. So I think you still have today and tomorrow, by the end of July, to take advantage of this sale. And again, biggest sale of the year. So edge finder, I use it on a daily basis. It is a massive game changer, or has been a massive it has been a massive game changer for my trading. By the way, if you don't trust me, well, do take a look at A1 Trading Trustpilot. Always, whatever you're buying in the trading industry, or like in general, always go to Trustpilot and read the reviews. Okay, first look at the score, 4.8 out of 5. I would say that is amazing, especially in the trading niche. Then see all reviews and go through them. Okay, read through them, and you will see that people are loving the edge finder, loving the software, loving the Discord. So you can see it works right there. 242 reviews. You have 242 traders giving their opinion on the edge finder and on the Discord and on the company in general. So 45% off with the code Marco. There's also a free Discord to join. So we have a free Discord and a paid Discord. So you can join for free, take a look, check it out, see if you like it, or you can become a paid member later down the line if you choose to do so. I will post the link. So let's go to Discord. In the comment section, I will post the link to join the free Discord. There's also a link here in the QR code on the screen, and there's a link in the description of the live stream. So you can find it in many, many different areas. Alan, hello, good morning. How are you doing on today? What's your take on the Fed? I think we have a joint segment later today, so we can discuss it live on the stream. For me, it hasn't been so great, but part of trading. Let's see. This month CPI should be hotter as oil prices spike. That's what I'm betting on. I'm gonna hold this position, and I'm gonna bet that the CPI on August 12th comes out hotter than expected, and it should push USD CAD up. And then probably the best thing to do would be to close the position before the Fed meeting in September. Positive seasonality for USD CAD for the rest of the year. I haven't seen that, but that's an added bonus. Let's see, seasonality monthly. USD CAD. Let's take a look. Well, yeah, in August and September, massively positive. So September tends to be the best month for USD CAD. Thanks for pointing that out. That's pretty good. Meta, bad miss on earnings. Yes. So we have Meta. It's gonna gap down a lot. You also have MSFT, Microsoft, which should gap up a lot. So a big gap to the upside. Looks like the earnings for Meta were very, very negative. I'm guessing because they announced a bunch of CapEx spending, while Microsoft did pretty well. So they kind of cancel each other out, right? But the overall situation is not good. The SPY, massive red candle yesterday. The Q's, massive red candle. RSP, pullback as well. We're going to see what happens today. Hi, Marco. As I told you before, I don't think Fed will raise rates towards midterms. And if you look closely at Warsh yesterday, he's just doing Trump's bidding. That does make sense. It does make sense. And I do see your point because, again, raising rates by most people is considered as bad for the economy. And it is bad for the economy if you're looking at growth, but it does tame inflation. So I thought Warsh was going to be a bit different. I thought Warsh was going to be more hawkish. Okay. More hawkish than expected, as he was at the first meeting. But looks like it was all a spiel. Looks like we're back to being more dovish than we should be, or the Fed is going to be more dovish than they should be. And they're going to be late to the party as far as controlling inflation. But it has happened in the past so many times that I just kind of got used to it. So it does mean I should probably look for some different positions. So yes, I'll keep holding USD CAD, but maybe I can do something else to position myself for basically a more dovish Fed. Okay. Marco, you bought any stocks long term? Nope. As far as individual stocks, I first need to see the SPY go above the 50, the 20, and the 10 EMA. That's the first criteria for me to be interested in stocks once again. I did try and take a stab long on the Nasdaq, which did not work out. So it was a quick bet on a possible risk on reversal because the Fed turned out more dovish than expected. I got stopped out. So I got stopped out of this one, and yep, that's part of the game. It was a small risk, just kind of a feeler position to try and hedge some of my risk off exposure, and it did not end up working out. So I'm out of that one. Would you finally long gold with dovish Fed? Not at the moment. So that's going to be the last thing I comment before I pass the stream to James. in my opinion, the chance for gold to go back near all-time highs is very, very low. I think we get more downside. I think inflation stays elevated, and at one point in time, the Fed will need to be more hawkish. I don't think there's a lot of retail interest in buying gold at the moment. I just don't see the catalyst for a breakout on gold. I don't see that catalyst right now. I would rather look to sell. If we break the 4K level, I think the fundamentals are bearish, rising inflation. So I would rather look to sell at the 4K level. And I do think the Fed is going to have to, if the CPI really goes up, so if the CPI really goes up, I think the Fed is going to have to hike. They're going to be late to the party, but they're going to have to hike. So I think there's better things to trade out there than gold right now. And if you zoom in on the price, it's pretty flat. It's doing nothing. It's stuck in a range. And also the reaction from yesterday was, I would say, minimal. Not really a huge reaction. Not really a huge bullish reaction. Okay, that's about it. You can catch me again in 2 hours during my second segment. Don't go anywhere because you have James coming on in 30 seconds. I'll play a short video now and then James will come on. So give me 1 second.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello. How's everyone doing? Happy Thursday. Welcome to the stream for anyone that's new. So yes, we did have the Bank of England that held rates about a minute ago, give or take 2 minutes ago. So yeah, as Ray Beast is saying, 0 votes for a cut. Obviously, I don't really think there's really any domestic or any major central banks that are looking to cut rates at the moment. Okay. So is that good for the GBP? It's not good, but it's also not terrible. So I'm still long on the pound yen. There's really not much going on here. We did actually see a little bit of a move into profit with this market or with this trade. However, really no follow through whatsoever. So we've actually ended up coming back down towards entry, which is a little bit frustrating, but it's completely fine. That's just the way the wind blows sometimes. So as we do see on the edge finder, we've got pound yen that is reading very bullish here. We have lost 3 points of score in the past 24 hours. So that's not great, but it's not the end of the world. It is still a bullish score. So that's completely fine. I remain long on gold, so these positions are still active. At some point, I'm going to probably stop mentioning these because, again, they are very long-term positions. They're not swing trades by any means. So if I keep mentioning them every stream for the next year, I might be saying, oh, I'm still long gold. Euro dollar, I am still in some short positions, but this is a DCA style approach, kind of similar to gold, but with a shorter term horizon, basically fading some of this upside that we are seeing. The daily is still very convincing to go short. I'm not necessarily bearish on the dollar either. Yes, we're seeing some downside, but there's not really anything here that makes me necessarily turn bearish at the moment. So this one is still active, but it's to be decided. We'll see really what happens with it. And Euro CAD is actually doing pretty well at the moment as well. So we are coming into the H4 200 moving average, showing a little bit of rejection. So I'd love to see a breakout of this 200 and a continuation to the upside. But again, we'll see. James is neutral. James is right, it's neutral. What are my thoughts about the Fed decision? I'll be honest, my friend, I was actually going to say this. I'm really hungover. I was out last night when the Fed was going on, so I'll be honest, I'm a little bit behind. So I did do a little catch up. So from my notes here, the Fed held rates at 3.75 on the 29th of July with 3 hawkish dissenters, signaling tightening remains live, but Warsh's elimination of forward guidance has created a regime shift where markets must interpret inflation data independently rather than following the Fed's messaging. Energy-driven inflation spillover risk and the absence of Fed communication guardrails leaves the dollar vulnerable to whipsaw. So yeah, I mean, there's not really much I can take away from that. Again, I'll be completely honest with you. I didn't watch it. So I do need to do a bit of research later today once my headache has gone away. James, it looks like JPY intervention an hour ago. Yeah, it is looking a little bit intervention-esque. The problem is I've got no idea if it is actually an intervention at the moment. We might hear something later today. The only headline I've got though regarding Japan is Japan PM plans to cut sales tax on food to 1%. That obviously isn't what's moved the market like this. So yeah, right now I'm not 100% sure what this is. It could be on the back of the Bank of England. However, we are also seeing other yen pairs down like dollar yen. So yeah, I do smell intervention territory here. Jadon Sancho. is that my lookalike we looked at yesterday? Oh, we've got an hour today. That's nice. We can take a bit longer. I know yesterday I did a half an hour one. Normally I do an hour these days. I got used to doing an hour and yapping. And yesterday I did half an hour and it felt like such a time crunch. I told you full moon crash. Is it a full moon? I've got no idea. I don't keep up with moon cycles or anything like that. But yeah, we are seeing a little bit of downside here. However, we do remain in this range. So there's still nothing to do. So what are we thinking about these markets? Well, the Nasdaq, as we were looking at, has broken below the previous daily support level. Okay, so looking very bearish on a technical basis. The left side looks quite convincing. You know, we've got really no technical support until around 26,000, which also lines up with a really nice round psychological number or key level, whatever you want to call it. On the other hand, though, this daily time frame is still bullish. You know, we've got the 200 moving average here that could act as could act as a potential dynamic support for this market to bounce and continue higher. And we do have the RSI here on the daily. It's a little bit oversold. So I think there is an argument here that the Nasdaq might not be a bad buy, especially with the weaker dollar and the lack of forward guidance we had from the Fed. So maybe there's some sort of idea like this. I'm not a huge fan of it. Again, I'm still quite cautious about the US markets, but I think the Nasdaq at the moment does look like the most appealing one to be a buyer of. However, as Ray Beast just said, Meta down 8%. Yeah, we also had Google. I think this was like last week, so it's not new news by any means, but we did have Google that I think reported their first negative cash flow release, or whatever the stock terminology is for it, which obviously isn't good. We've got SpaceX down as well. So buying the Nasdaq technically looks quite good, but again, from what I know about what's going on with the individual stocks that make up the Nasdaq, the S&P, so on and so on, it's not looking fantastic. This is gambling. What's gambling? Do you mean trading in general, or do you mean something I've said? Hi, James, my brother from another mother, rapper. Gabes, I appreciate that. James, Bank of England press still waiting. Yeah, I did see a few headlines, but I didn't read them. Let me just see what's going on real quick. Iran's IRGC says they attacked a base in Jordan. That's not right. Bank of England Monetary Policy Committee voted 6-3 to keep interest rates at 3.75. Bank of England holds interest rates. Yeah, no, got nothing regarding press conference or forward guidance yet. Will that be live beast? I'm not sure what that means. Euro New Zealand did make a nice fib retracement. Unfortunately, the edge finder was not bearish. Yes, I know. We were looking at that. Was it last week or the week before? Euro New Zealand did look quite attractive to be a short seller. However, you are right. It fell off the edge finder, so I scrapped the idea. And it's been a little bit of an unfortunate move on my part, unfortunately. So yeah, if we take the fib from the high to the low, we can see we had that perfect 50% retracement into the 200 moving average. So technically I should have been short. I could have been short like this, but again, because the fundamentals flipped, so the edge finder no longer has that bearish reading, I can't justify taking that trade anymore. So I had to scrap the idea. So yeah, a little bit of a painful one to watch it continue lower from this point, but what can you do? That's following my framework. James showed me fidget ball. It's a stress ball, my dude. It's not a fidget ball. I'm not 12. But yeah, it's a little globe. I got like 50 of these off Temu for about £5. It's just a squishy ball. Not squishy, not those TikTok. It's a stress ball. I don't know what I'm yapping for. Thoughts on Aussie US dollar? Okay, we'll have a look at that. Is this Nasdaq 100 cash or futures? This is not NQ. No, we're looking at CFD markets specifically, or I look at CFD markets. Can you tell me more about USD INR? No, no. With the greatest respect, I'm not going to do that because I don't know anything about the INR. I don't know what the central bank's doing and how their economy's doing. So unfortunately, I can't really give you much there. Maybe we could do some technicals on it, but beyond that, I'm pretty useless. Okay, so Aussie US dollar. Although, actually, on a separate note, I was talking to a friend of mine and expanding investments into places like India and China is looking like a really good opportunity moving forwards, but we'll see about that. That's obviously not a topic for the stream. Okay, so Aussie US dollar looks really attractive to continue higher here. We are in a bullish trend. We've seen rejections here of this 200 moving average. We created kind of a higher low here, although obviously we are creating these lower highs as well. So price action wise, not great, but interactions with the moving averages are looking quite good to be a buyer potentially. What we also have, and this, ladies and gentlemen, is quite interesting because what we've been saying, the narrative I've had for the past like 1.5 weeks, 2 weeks, was that the edge finder is bullish on dollar pairs, so pound dollar, euro dollar, Aussie US dollar. The problem I had with that though was because oil was rising. We did have expectations. I would say general consensus was that we were going to have some sort of hawkish to neutral hold by the Fed, which did happen. We got the hold, but it wasn't necessarily a neutral lean like I think markets expected, hence why I think we're seeing a large part of the sell-off today. So this could now be the catalyst actually for us to lean back towards the edge finders reading, specifically with the dollar pairs. So what I'm trying to say here is the Australian dollar is very bullish here, or the Australian dollar, US dollar is very bullish on the edge finder. Previously, I've been ignoring these readings because, again, I was more leaning towards buying the dollar, not selling it. But going back to the chart here, what we are seeing again is the nice bullish trend. We've got the edge finder reading, so maybe this is the time to go back to the typical framework I follow, which is edge finder, trend, enter, on a pullback as well. So this could be a decent little position here. I wonder if this is a fib retracement, actually. I think it is. Just 1 second. I'm just going to mute myself. Oh, sorry, excuse me. So yeah, if we take the daily low to high here on the fib, we do see this is a pretty nice fib retracement and rejection back to the upside. The H4 does seem like it's on a bit of a downtrend here, but it's not a huge deal. Again, the daily looks quite nice. The edge finder's bullish. So I think Aussie US dollar, I would say, not financial advice, but I would, yeah, definitely lean more towards being a buyer than a seller in this market. XAU, euro dollar. Okay, we can take a look at those as well. Again, we are on, or I'm on for an hour today, so I like to spend a bit more time talking, then we go over markets, and we talk a bit more and sort of bounce in between things. So bear with me. James also working on small back testing seasonality model. Very nice. Yeah, I think seasonality is it's good, but the sort of problem that I've got with seasonality isn't that it's not a useful tool. It absolutely is, but I find it hard to use it in a way that really doesn't involve my typical strategy anyway. So if seasonality is bullish and the fundamentals are bearish, I'm going to follow the fundamentals. It doesn't matter what the seasonality is doing for me. But then if the fundamentals are bullish and seasonality is bullish, great, but that doesn't really change anything for me. I'm still going to take the same trade. So I like to use it in confluence, but again, I wouldn't say it's something I would ever trade off alone, unless there is a very specific historical pattern that's not necessarily like a month-to-month average return. Please analyze gold. Am I bullish on Israel? What does that even mean? And then I've got another one here. OREWA NARU. I don't know if that's a different language, or I don't know what you're saying there. You could be insulting me and call me every name under the sun in a language I don't understand. Okay, so gold and Eurodollar. So let's have a look at those ones. So gold does seem, again, actually like a better buy than it did. I think I said yesterday or the day before that day by day, I think gold is starting to look a little bit more attractive. So what we have is oil down. This isn't really that much significance, but oil is slightly weaker overall compared to where it was on the initial sort of re-escalation here. So we've got that aspect. We've got the fact that the Fed didn't give any forward guidance, especially not hawkish forward guidance. We've got the dollar that's weaker, actually potentially going to have a little bit of a pullback here, but overall dollar is weaker. We've come down to 4,000, which is again a really nice round number, key level. We've got this daily and weekly level of support that's failed to break out. So I think there is an idea really of being a buyer, which is kind of what I'm doing here. But again, this is more of a long-term expression of my gold bullishness. However, oh, wait, sorry. Last thing I'll say, I completely forgot to mention, gold is on the edge finder with a bullish reading. So we've also got that in our favor. The issue is, however, the Iran situation is still ongoing, which isn't a good environment for gold. You know, we do still have oil pressures to the upside, and there is still expectations for the Fed to hike rates from like the next meeting basically into 2027. So those two things are quite big things to keep in mind. So I wouldn't say gold is a good opportunity to continue the way we were. You know, back in this period, all we needed to do was buy gold. You know, it was very simple. We didn't really have to do anything. It was more just technicals, wait for a pullback, look to buy. We're obviously not in that same position. I don't think we are again in that situation yet. So I would still expect gold to break below 4,000. But when that will happen, I don't know. I think that would need a catalyst. So whether that is higher inflation or something just to kick the dollar up and help just solidify the rate hike expectations a little bit more. Right, what are we saying here? So for seasonality models such as, such demand for consumer staple stocks during holiday season. I see. Yeah, I know there is. I've got a friend that trades agricultural commodities. Very, very good at it. He does, anyway, yeah, very, very good trader with that type of market. And he uses seasonality a lot because, you know, weather cycles do repeat. You know, in winter and summer, you can expect similar things, and the market will react in similar ways due to, you know, let's say wheat not growing as quickly in winter or whatever it may be. Again, I don't trade those markets, so I'm not 100% sure on the exact details of it, but you get what I'm saying. I do think seasonality on different markets or asset types can be absolutely phenomenal. But in liquid FX markets, I would say it's actually probably the least useful type of indicator or tool, just because the FX markets really don't rely on seasonality. There isn't like a time of the year really where something happens that we can continuously repeat to trade on. I'd say really the only thing we got maybe is sort of Santa rally, but obviously that's not FX, is it? That's more going to the stock market. You got the summer holidays period where the markets just sort of flatten out a bit. But yeah, generally speaking, for FX, I just don't really like it that much. Anyway, I digress. EU, yes, man of God, I do apologize. We did say we'd cover EU, didn't we? I forgot. Well, I'll leave it on here while I just catch up with the chat, and I'll go over Eurodollar in a second. It's Japanese. My friend, I might look a bit Japanese, but I've got no idea how to read it. Also, Swiss yen. I can do Swiss yen, but please don't call me Jamie. I don't like nicknames or shortened names. Euro Aussie short also makes fib rejection and is overbought. Also daily bearish MAs. Do you fundamental agree after lower Australia? Okay, yeah, we'll have a look at Euro Aussie. Okay, right, let's keep on track. Let's do Euro Dollar, and I'll come back to the chat, and we can do Euro Aussie, and then we'll catch up from there. Okay, Oh, and then we'll do Swiss yen for you, Fibonacci. I like your name, by the way. I love Fibonacci. I was considering, before I used the name James, or Forex James, I was thinking about using Fibonacci, but I don't know. Decided against that one. Although in hindsight, I probably should have done it. It would be a cool name. Anyway, again, I'm rambling. So euro dollar. I'm just thinking, so just bear with me for a second. So euro dollar on the daily, it looks really good to continue short on technicals. It's okay, don't worry, I'd take no offense. So yeah, euro dollar here, bearish trend on the day. We've had the moving average crosses, purely just a trend change indicator. Perfect. We are still sort of within retesting territory of the previous daily low. We are currently hanging around the 50% retracement level. So the daily time frame for me does still tell me to go short. Whilst we're on the topic of technicals, one of the reasons I'm still in my short positions, which I'll sort of lead on to in a second, because I actually do lean a bit more bullish on euro dollar, but the reason I'm still short is because of this historical pattern we get. So what I'm expecting is this to continue, basically, where we created the high or lower highs here. We did the same thing. And from there, we kind of just continue to run lower. Yes, we have fluctuations in the meantime. Of course, that's the markets. But overall, the move is lower from this sort of historical pattern that we get. So that's what I'm looking for. We've also got really nice technicals or really nice candles here on the left. I do think could see a bit of a correction lower or get correction on a move lower here. So this is kind of the idea. We've also got some seasonality, funnily enough, that does line up with euro dollar short. So if we go to seasonality scans, we go to annual, and let's just pull up euro dollar here. So what we can see is we've got this move higher into basically the end of August, start of September. And this is actually what I'm selling into at the moment, looking for this move lower into the end of the year. So basically mid to the end of November. So this is what I'm trying to capitalize on by building up positions during this period. So again, I know earlier I said I don't really use seasonality. I don't really, but it does sort of align in this situation. So I thought I'd show you anyway. Now, back to the buying idea. Is euro dollar here actually? I don't think it is. So euro dollar doesn't seem to be on the edge finder actually as a bullish, as a bullish reading or bearish. But what we do see, gold, silver, New Zealand US dollar, Australian dollar US dollar, pound US dollar, they're all getting bullish readings. So hence kind of bearish lean towards the US. So I would say actually being a buyer might be more fruitful in the short to medium term or near to medium term. And then longer term, I would be happy to actually jump back in the short positions. So in terms of technicals, I don't really have anything here. So let me, let's just get rid of this fib for now. So if I did want to be a buyer, what I would need to see is a clear out of these previous highs, a new high get formed, then a pullback, moving averages cross, and then a continuation from there. That's really as simple as it is. So basically, change of trends to bullish, pullback, look to buy. But again, I would also need to see it on the edge finder to justify doing that. Right, let me catch up. So Euro Aussie, and then we'll do Swiss yen. Let me just put it on the chart. So again, I don't forget to do it. The reason I asked about US dollar INR pair was because India is classified as an anti-AI trade. Excuse me. And the Kospi seeing some cracks. I don't think the Kospi seeing cracks, my friend. I'm fairly sure it's just crashed. Actually, let's just, before we move on to this one, let's just take a very quick look. Well, Kospi, is that right? Yeah, there we go. Fairly short. Yeah, I mean, I wouldn't say this is cracks. This is a major problem. Yeah, the amount of people that lost money on that is crazy in Korea. Anyway, so Euro Aussie. Let's just redo all of this analysis because this is old now. What did you say, Christoph? It's made a fib rejection. I'm going to assume on the daily. Actually, this does look really good to continue short. So the daily time frame looks phenomenal. Let's just see here. Yeah, Christoph, you know what? Maybe this is actually a pretty solid trade idea. Wait, were you talking short or long? Overbought. Yeah, I would say that is kind of the problem with this market, though, is the cooler CPI out of Australia. However, the daily trend does look good, and yes, the technicals look fine. Downside, obviously, is we don't have a Euro Aussie bearish reading. So I would say, yes, technically looks great. Fundamentally, it's quite loose. I wouldn't say there's enough there to warrant a position for me personally. Okay, do Swiss yen. Where's Swiss yen here? Please explain interest rate diversion. Okay, so you've got two ways really to look at an interest rate divergence. So you've got, let's say you've got central bank number one here. You got central bank number two here. So central bank number one might have an interest rate, let's say, of 2%. And central bank number two might have an interest rate of, let's say, 0.5%. So you've got an interest rate divergence here because you've got one that's higher than the other. So this is already a nice divergence, but let's add some more interest here. So let's say central bank number one is actually dovish and they're looking to cut their interest rates over the next, I don't know, 6 to 12 months. Doesn't really matter the time frame in this example. And then central bank number two is actually quite hawkish. They're looking to raise their interest rates over the same period of time. So then we've got a really nice dynamic here where actually selling, although they've got higher interest rates, selling the central bank number one currency, so let's say, I don't know, the dollar or the euro, whatever it may be, and buying number two, looking for this rate divergence to basically flatten out or actually change. And that would be sort of a yield gap. Now, that's not a super comprehensive example, but obviously, you know, we are on a live stream, so time is of the essence here. But that's the very basic idea of it. Hold on, let me just catch up here. What's been said? What's going on the Nikkei? We can take a look at the Nikkei in a second for sure. I really like the Nikkei actually at the moment, so absolutely we can take a look. Hi James, I might be a bit off topic, but how much capital can be substantially enough to grow my equity comfortably? I'm using GBP based currency on my account. It's a interesting question, and it really depends, because when you say grow capital substantially, to grow equity comfortably, it doesn't matter. You can grow equity comfortably with £1,000 or £100,000 because you're essentially just playing percentages. It's a percentage game. So if you're risking 1%, that 1% is 1% on regardless, you know, of whatever account size you're using. So there is that side of it, but then I'm going to assume you mean in terms of how much money you're actually getting. So you've got to, again, think of it in percentages. So if you risk 1%, let's say you go for a 1 to 2, and your 1% risk is, I don't know, let's say £500, and you've got a £50,000 account, that's a 1% risk. So then your 1 to 2 would return you £1,000. So again, just think of it all in percentages and figure out what it is you want to make on a trade realistically. Obviously, you know, we all want to make £1 million on a trade, but realistically, what is it you want to make? And then figure out the percentages behind that and then how much you need for it. Okay, Swiss yen. There's nothing. This is a dead market. Edgefinder. Yeah, I'm going to be honest. If you're looking at Swiss yen, you may as well look at some other yen pairs instead. So Swiss yen does have a bullish reading. It's only 5 though. But then we've got, you know, New Zealand yen, CAD yen, and pound yen all doing significantly better in terms of scores. The market here is completely sideways. There is nothing going on. Then you've also got the aspect of the interest rates. So the S&B interest rate is 0. The BOJ is at 1%. So even on the swap side, it's not fantastic. So there really isn't a reason, in my opinion, to be trading Swiss yen right now. The advantage, again, would be in something like pound yen, New Zealand yen, and other yen pairs. But even from a technical side here, there's nothing I can do because, again, it's just sideways. There is no structure. There's no real trend here. That there is nothing for me to even begin to analyze. You thought my name was Jamie. It's okay, my friend. Don't worry. It's all good. So what we're looking at, the Nikkei. Okay, I'll again leave that on the chart, so I'll go over that in a second. Any thoughts on pound Swiss can break Could break long in 10-day range. Yeah, I would still say pound Swiss is a good buy. But again, we'll go over that in a second. Short gold, yes, I would agree with that idea. I'm a beginner. I need a mentor to teach me. I would say your best bet is going to the A1 website and getting the free course, watching my content, watching Nick's content, and other people's content that trade fundamentals, specifically fundamentals, and get what you can. Because what you don't want to do, and this is a tip for everyone watching, because I'm a mentor, I'm not trying, I'm saying this from a place of absolute honesty. There is no reason to buy a mentorship or pay for mentorship when you're a new trader, because everything you need is free. Everything. So everything I teach is free. You can get it on Google. Of course, the difference is it's all laid out and taught with modules and assignments. So you got that structure. But when you're new, how to download MetaTrader, how to use TradingView, what's CPI, all of this stuff, it's on Google. You don't need to pay someone to be a mentor to get that. Even technicals. My strategy, I've made probably 20 different videos on how I trade. So save yourself some money, because first of all, a good mentor charges a lot of money because they put a lot of effort in. Second of all, there is a lot of bad mentors out there that will just teach you support, resistance, or some repackaged garbage, and it's just not worth even attempting to do it. So that's my tidbit of advice for you today. Okay, so the Nikkei might be giving me another chance to get short. So we were looking at the Nikkei yesterday, and I was a little bit annoyed because I missed this 50% retracement into the prior support here. So break and retest pattern. I completely missed it on this wick here. We might be getting another chance to go short in the same zone. We've got the H4 moving averages to bearish. We've got obviously a bearish trend here with the lower highs. We've broken previous structure to the downside. So overall, the technicals on the H4 look absolutely fantastic. We've also got the Nikkei reading bearish on the edge finder. Now, there is a problem with this trade, though, which is the daily time frame here. So what we see is the daily is actually still in a very healthy bullish trend. The 200 is completely intact. We are currently hovering around this 100 moving average. The RSI is a little bit oversold here. So either this is actually I'm a little bit cautious, is what I'm trying to say here. I'm worried that this might actually just be a shorter term pullback and we can continue higher. Then if we end up taking this short position, are we just going to come down to this 200 and do the same thing actually, where we just continue higher from that point? I would only really feel comfortable if we broke this 200 to the downside and then we started to see the daily moving averages cross. That would be perfect, but whether that's going to happen or not, I don't know. So I would say it's worth, and again, not financial advice, this isn't a signal, but I would say it's worth taking a short position, smaller size, maybe half risk, and just seeing how it reacts on this daily time frame. Right. What are we feeling for news on gold? I'm not sure what you mean by that one. Do you mean the FOMC, or are you referring to upcoming news? Long or short gold? Wrong place to be asking me that, my friend. We don't do signals here. Actually, well, we do signals. You can get the signals from the A1 guys, but I don't give out signals on stream. You have to pay me for that. Start with 5K is comfortable. Yeah, realistically, I think the path to trading is obviously backtest, and backtest more. Then live test on either a very small account that you can afford to blow if everything goes wrong, or a demo. It doesn't matter which one, really. Again, it's more down to your capital basis and your personal situation. Once you have got evidence to yourself and you're comfortable that trading is something you actually do want to do, and you have the skill to warrant an investment into your trading account, then you would want to really go in with 5, 10, 15,000. Obviously, higher the better, realistically. But yeah, the worst thing you can do is backtest on something like a $500,000 account or $1 million account. You see all these crazy gains and crazy swings. Then you go into your live account that might be $500 and you make like $10 on a trade. You very quickly get frustrated and impatient, and that's when that whole oversizing problem comes into play. Okay, let's get back on topic. Korea is gone. They are hosting trading event. Like it's, yeah, I saw that, Ray Beast. I saw a TikTok probably a couple of months ago now, where yeah, it's like esports but for meme coin trading. It was crazy, like yeah, absolutely nuts. Okay, what else is going on here? I'm somehow getting negative swaps on. What do you mean somehow, brother? I just told you about the swaps. So what we do to keep it super simple is we go to the Edge Finder, we go to Carry Trade Scanner, and this is exactly what I was telling you about the interest rate thing. Go to Swiss Yen. What? Oh, it's not here. Maybe it's caps. Hold on, let me just try again. Swiss JPY. Yeah, there we go. I had to type in caps. The SNB, so the Swiss National Bank, which is the CHF, has an interest rate of 0. The Bank of Japan, the yen, has an interest rate of 0.75. So you are losing money by being a buyer. So, oh wait, hold on. Sorry, I've misread your message. Sorry, you are short and you're getting negative swaps. Okay, well, it might be a broker thing then. Often brokers don't follow swaps one-to-one. So, you know, if you get a market with, I don't know, let's say 2% swaps, you're not going to get full 2% on your broker. Well, unlikely. So yeah, just make sure you check what your broker is actually paying and what your fees are. Good day, Mr. James. What's your opinion on channels and value? Oh, and the value they carry as a pattern approach. Channels. I think they're just basically trend lines, aren't they? I think it's good. It's the same as kind of a moving average, really. It's good to get the idea of the trend, but the problem is with discretionary things like that, which is why I use moving averages, they can be drawn differently. And that's kind of where the issue comes in. You know, if I draw a trend line, let's say like this, I'm sure there's 50 other traders that would disagree that I just drew this wrong. Maybe I should include the wicks. And there's small things like that I just don't really like. But, you know, generally speaking, I think they're decent to find the trend and follow. Okay. 200 to 202 Swiss yen. How long do you hold your trades? Typically about a week. I don't hold trades for that long. Yeah, normally a week or two, maybe. The longest I've held a trade, I've got no idea, probably 1 to 2 months, maybe. Yeah, I've got no problems. I don't really care if a trade takes 2 days or 2 months. It is what it is. As long as obviously the reasoning and the thesis behind the trade is still valid, it's fine. Hardest part is discernment, learning the wrong information. That is also a good point. Yeah. So you would have to, that's kind of why I said, you know, check the A1 Trading free content or the TraderNick content on his channel. Or again, my content is not really tailored towards beginners, to be completely honest, but should give you an idea of certain topics. And then you get sort of a framework. You make a you know, like a notes and just take notes of things that sound important, like interest rates or central banks, inflation, growth, things like that, and then go and do research on those specific topics. 3 years in and now, just reaching a point of profitability. Did it in my demo, now doing it live. Very good. I'm proud of you. Big achievement. What's your news time? I don't know what you mean by my news time. I mean in the UK, if that's what you mean, that's my time zone. Thoughts on Micron? I've got no idea, buddy. I don't do stocks, unfortunately. I'm just a FX degenerate. Passed a firm 8%, 5%, then made 3%, another 4%. I have a lot of capital in brokerage stocks, gold, silver, bond, but I'm still skittish on making the leap using that capital for trading. Fair enough, David. I mean, again, it's all about the evidence you've got. So if your back tests are good, you can pass prop firms, then it might be worth it. You don't have to do the whole amount of money. You could just put, 10% in and just test. My swaps on Swiss yen are positive. Well, there you go. Yeah, you're gonna get it. You're gonna get different swaps on different brokers. Again, I don't think most retail brokers give you the full swap amount. James, thoughts on Aussie Swiss? I feel like there's probably a few markets I've forgotten to cover, but it's fine. If I've missed one of yours, just let me know again in the chat and I'll go over it. So Aussie Swiss, let's take a look. No edge finder reading, so automatically I'm going in more with a neutral bias here. So let's see the time frames. What are we doing? Yeah, so monthly bearish, weekly. Actually, there might be a short position idea. The weekly is in an interesting spot at the moment, actually. So what we can see with a lot of the Swiss pairs, and we've covered this quite a lot, is what often happens with Swiss pairs is we do have these rallies to the upside, which is obviously what we've had recently. But if you look at how the market reacts around the 200 weekly moving average, we quite often reject it. And if we don't reject it, we break above and very quickly revert back lower. So a counter position or a counter, well, it's not counter trend really, is it? Because we are in a bearish trend, but more of a higher time frame continuation idea might not be the worst thing. But the downside is you are counter trend trading at the lower time frames, like the H4, and I think the daily as well. Yeah, so it might not be the best idea to go short right now. But if you could wait to see the daily and the H4 flip bearish again, and then follow this weekly trend or pattern that we see with the 200, it could be a good short position. But yeah, I wouldn't really want to be a buyer, to be perfectly honest. Where could we enter Euro Swiss longs? Okay, let's take a look. Yeah, I mean, this one actually looked quite simple. So if you wanted to be a buyer, which I think automatically looks decent based on the trend here, fib from the low to the high on the H4, that fib lines up with previous structure on the left here. Not perfectly, but we've got that sort of idea. So I would kind of like to enter probably in the middle of the fib, actually. So just in between the 50% and 61.8%, stop loss at the low, and then, yeah, take profit wherever your target may be. So very simple here. Break of previous highs, retest into the fib zone, bullish trend, continuation higher. Very bread and butter. When will your George Soros-esque trade arrive? Well, that's kind of been, there's a spanner being put in the works there. I did do it earlier in the year with Pound Aussie. That was a fantastic trade on a very similar thesis, but mainly benefiting from the RBA hawkishness and hikes. But the pound specifically, yeah, the idea I spoke about last year in November has been kind of sidelined for now. I still do think the UK is in some serious trouble, but we are seeing sort of a normalization, I think, with the optimism around the PM. You know, Andy Burnham's just come in. He seems to be doing some decent policies so far. And the big but here is, you know, he's discussing a lot of things like nationalization, cheaper prices for transport, and, you know, good things that sound helpful for people. But then you look at like the financing and how that's going to work, because the UK is in debt. It's not in a good situation. Obviously, it's in debt. You know, most countries are, but it's in a lot of debt. We are technically a welfare state now. You know, we spend more on welfare than we bring in from income tax, which is a real issue. You know, the country is just in a really bad situation financially. So all of these small fixes can be good short term, but longer term, I still think these real fundamental issues are there. I really don't know how they're going to get fixed, to be honest. So it's more of an idea that might come into play in the next 2 years, 5 years, 10 years even. It's not something that we would execute on tomorrow. Oh, Christoph, sorry, Pound Swiss. Yeah, I saw that message earlier and completely forgot. Yeah, so Pound Swiss is exactly the same as what I've been talking about. There's no change, and actually the same as Aussie Swiss that we just discussed about this weekly time frame. So when we look at the weekly, we come up to the 200. We either break above it temporarily and then drop back below, or we completely reject it. So I think if you did want to be a buyer, having a take profit at the 200 moving average would be the most sensible thing to do. Or at least a trailing stop that's quite aggressive towards the 200. We might get some sort of breakout. You might be able to catch a little bit more, but I would personally rather be looking for a short position off that type of move. Short term though, we did have Pound Swiss bullish. Do we still have it? Yeah, we do. So Pound Swiss is very bullish with a score of 7, so that's great. The daily time frame, we've seen the moving averages change trends into a bullish trend. The H4 also looks great, bullish trend. So yeah, I'd be looking really for this break and retest. So We've had the break, retest into the fib, retest these previous highs, and then continuation higher into that into the weekly 200 moving average. That would be my approach here. What do I think about short dollar yen? I wouldn't like to do that. As the message below from Pixel says, it's an expensive trade to hold, and I just don't think it's worth it. So if you were looking to short, you've kind of actually missed the move here. It's already happened. It could obviously go lower, but I don't really see the benefit of going short. I would actually just rather wait to be a buyer at a cheaper price. 164 is critical. They need to do something. It's uncomfortable. It's uncomfortable for Japan, but it's more a case of, we can sit here and speculate about interventions and when they'll happen and by how much. But the thing I've been saying over the past couple of weeks regarding dollar yen, it's, in my opinion, a bit of a losing game trying to time an intervention. You're going to end up taking these short positions, and you might get one, maybe two that work out, but you are overall going to end up in a pretty difficult position, I think, depending on how you execute, so on and so on. But generally speaking, I don't think it's a great idea. So if, let's say, we do get an intervention that continues to run lower towards the daily 200 moving average, which is, again, the pattern that we see or have been seeing recently with these ones, I would rather not even bother trying to short. And if we do get the intervention, sure, I'll miss out maybe on the short position on obviously the P&L side, but then I could just be a buyer off this 200. And that way I save myself the headache of trying to time an intervention, and I can still benefit from the downside. James, what makes fib reasonable thing to find entries? Because it's measured. The pullbacks are measured. So it's not a case of, the way that trend following often works is by trying to enter into a trend by getting a pullback. But how would we ever time this pullback? You could say, oh, we've got the moving average, but that's not really concrete enough. So something I like to look for is the 50% retracement, because the way I see that, it's a 50% off the value. So let's say you're bullish on dollar yen, obviously like back here, for example. And actually, you can see this was a completely random pick, and it comes down to the fib. So it's a reliable tool because it's reliable. It's just a very simple 50% increase or decrease on the trend. Does that make sense? And it's a level a lot of people look at, or an amount that a lot of people look at. So yeah, there's not really like a crazy thing behind it. It just works. Obviously not all the time. Nothing works all the time, but it's one of those things. It just does. If you go to any market, really, I'm not sure about stocks and crypto, but any sort of FX market like euro dollar, pound dollar, dollar yen, euro Swiss, whatever it may be, you will find that fibs do work a lot of the time on pullbacks, especially within trends. In ranging markets, they're pretty useless. Though in current market conditions, these past months compared to pre-Trump era, thoughts on current market conditions. It's definitely harder. I would say being a trader at the moment with Trump in office has been a real test. You've had the tariff hoopla. You've then had the Iran situation. It's not been fun. Well, sorry, no, it has been fun, but it's not been easy. So yeah, I would say if you have been, or if you've been struggling in the past months, you're not alone. I think a lot of traders have been having trouble because you could take a position one day and then Trump tweets something or does something and then it's invalidated the next day. Have you thought about swaps and macro for that position? For which position? I'm not sure if you're talking to me on that one. UJ short is expensive. Yeah, this is why. Yeah, it's another reason why going short actually on dollar yen isn't a great idea. It's the swap side as well. What do I think about dollar Swiss, pound dollar, pound New Zealand? Okay, we've got some markets to cover there. So dollar Swiss we'll start with. Just realized we've only got about 10 minutes left. This hour feels like it's gone quite quickly. Hold on. Oh, sure, that was bad. I nearly dropped tea all over my desk then. Hold on. Oh, it's going a bit cold. Excuse me. Talking for an hour, you get a bit of a dry throat after a while. So, dollar Swiss. Let's see. Yeah, it looks very similar to what we've been discussing with the other Swiss markets, to be perfectly honest. And I'm not really opposed to going short here. I'm not going to, but I wouldn't mind taking a small attempt. And the reason is because we are currently rejecting this 100 moving average. We're at previous resistance, so it looks like we might have a little bit of downside from here. Whether that's actually going to happen, though, I'm not 100% certain. So I think realistically, it would be a case of what we've already spoken about, waiting for this market to come towards the 200 weekly moving average and then looking to go short again, continuing this sort of pattern that we have. This was a bit of an anomaly, but over the recent years, what we can see here is the same sort of pattern here. So we come up to the 200 and see a bit of a rejection to the downside. Might be a play to make. However, again, the same thing applies. The daily and the H4 are bullish. So it'd be better, in my opinion, to actually wait for these moving averages to cross into a bearish trend, then benefit from that weekly downtrend. I don't think we've got a reading for dollar Swiss, though. No, there is nothing on the edge finder. So fundamentally, not a great trade. Technically, I don't really see much, to be honest with you, right now. So I would avoid dollar Swiss at this moment. GBP USD. Let's see, where is it here? Yeah, so it's a little bit of a tricky one because there is just nothing happening. You know, we are just stuck sideways on pound dollar at the moment. So I wouldn't mind the idea of going short, but again, I'd need something to warrant that. At the moment, the UK is doing quite well. We do also have pound dollar on the edge finder with a very, very bullish score. So short-term buys, I think, might be the play. And I would only go short if we got some sort of catalyst. As I said earlier, you know, some inflation, something to kick the Fed and to kick the dollar and solidify more of that hiking idea by the Fed. So in terms of actually getting into a position here, it's a little bit difficult, again, because we are just sideways. There is nothing I can do here. So I'd need to see a break, some sort of move to the upside. Moving averages define some sort of bullish trend here, begin to fan out, pull back, and then I would look to enter on a pullback and then that continuation higher. That's really all I can do because, again, there is just no direction here. Pound New Zealand. Let's see. Yeah, not looking fantastic, actually. It's looking very bearish, but we don't have a reading on the edge finder, do we? No, there is no reading for pound New Zealand on the edge finder. So fundamentals weak. There is nothing to warrant me taking a position here. The daily doesn't look fantastic. We're kind of just sideways here, testing this 200 daily moving average. So daily and edge finder not great. The H4 though looks interesting. We do have the bearish moving averages. We do have this pretty decent level of support here. So, oops. So what I'd like to see is a break below, retest, and then continuation lower. And then we would look to draw the fib. I know, let's say something like this. Fib lines up with previous structure. So this previous support, that would be the break, retest, into the fib, continuation low, the bearish trend. But of course, that's based on just technicals. There is no data really to back up that idea, unfortunately. Gold, okay. Might buy gold today, waiting for the current H4 candle to close. Yeah, so as we said at the start of the stream, gold is in a bit of a tricky point because although you know the weaker dollar is obviously a benefit for gold, it's looking a lot more conducive. I don't think gold longs are the best option right now because we've got some good things like the dollar weakness and lack of forward guidance from the Fed. Great. But the oil situation in Iran is still ongoing, regardless of sort of fluctuations in headlines. And we are still expecting the Fed to hike rates at some point. So I wouldn't say being a buyer of gold right now is the best idea. I'd say it's quite fundamentally flawed. But that also doesn't mean I'd want to be a seller. I think gold is a better just sort of wait and see market and wait for something to happen to to be a driving factor of actually being a buyer or a seller. So at the moment, I would expect gold to drift down towards 3,500. But again, I don't really think there's anything to specifically warrant that. If we do get an escalation within the Middle East, that could be definitely a factor. So yeah, as I said, I would rather use gold as just a wait and see market, because at the moment I just don't see really anything at all. Pound Swiss, we did already cover Pound Swiss, my friend. I've got about 5 minutes left. We can take another look, I suppose. As I said, we do have 5 minutes, and there's not really anything else for me to go over. So yeah, Pound Swiss, exactly the same thing as what I said earlier. For those of you listening, what we see previously is this pull into the 200 moving average on the weekly time frame. We've got Pound Swiss bullish on the edge finder. So what I want to do is be a buyer in the short term, and then actually a seller in sort of the medium to longer term if we see Pound Swiss come into this 200 moving average. So it would look like a buy here, take profits at the weekly 200, and then go into a short position and look for this continuation to the downside over a longer period of time. What we see on the daily time frame in the H4 is a bullish trend. We've got a really nice fib level here that lines up with the previous highs. So I'd be looking, well, we've already had the break, so I'd be looking for the retest of these previous highs into the fib zone, into the moving averages, and then a continuation higher, again, back into that weekly 200 moving average. So there you go, speed run through Pound Swiss. Very nice and simple. Hey, joining late. Forgot this stream started early. Max, you need to set your timer. Put it in your calendar. Every weekday, stream starts early. We covered pound yen. We did kind of, and I am long on pound yen, which is a little bit frustrating right now because, it was kind of just sideways for a little while, finally moved into profit, and then, ended up back towards entry, which is a bit annoying. So pound Swiss is actually a really simple trade. We've got positive swaps. We've got this bullish trend here. We are currently still holding this fib level and the previous high. So technicals all aligned, completely fine. We've got the edge finder that is very bullish on the edge. Edge finder that is very bullish on pound yen here with a score of 9. So fundamentally, great swaps, great technicals, great. Although the price actions are not fantastic, I am willing to sit through it again because positive swaps. I'm just getting paid, so it's not really a problem. But yeah, pound yen I think is great. 108 to 1.1 on what time is it? Oh, 6. Okay. 108, 1.08 to 1.1 pound Swiss. Is it? Let's see. Yeah, I think. Hold on. Where's that on the weekly? So 101. Sorry, 1.1. Was it 1.1 you said? Yeah, 1.1. Yeah, I actually do. I would completely agree with that, actually, Anton. I think that's a good idea. Anyway, I think that's pretty much wraps up my segment today. Although I do have, like I said, another 2 minutes, give or take. So let's just do a quick rundown on the edge finder. We've got pound yen, we've discussed. CAD yen. Yeah, I mean, I don't really want to go into another yen pair. As I said, I'm already in pound yen. That wouldn't really make much sense. Pound dollar is bullish, but we need to wait for something to happen on pound dollar because the price action is just sideways. There's really nothing to do at the moment. The DAX is bullish. I was watching the DAX, but it doesn't look the best right now. So we are kind of in just sideways, just a range really on the daily. The H4 doesn't look too bad. So what we've got on the H4, which is actually what I've got marked up here, we've got a little bit of a market gap. So I'd want to see the pullback into this 50% retracement, retest these previous highs, because again, we've had the break, retest into the 50% retracement. 200 comes up towards price, something around here, and then a continuation higher. So this is what I would love to see, but whether we get that is a different question, because we are, seeing just this consolidation. So it might be a case of actually this is just like a accumulation, if you will, and then actually we're ready to run higher with not meeting this pullback. So we'll see. A little bit of a frustrating one to wait for, but what can you do? That's our job. Okay, so DAX is done. China 50, I don't really like China 50. I'm going to sit out of that one. UK 100, maybe. Could be something there. Yeah, so we were looking at this market at some point, maybe earlier last week. I'm not too sure when it was exactly, but it's the same as the DAX, really. Fib from the low to the high, pull back into, in this case, the 61.8, retest these previous highs, and then a continuation higher. We've got the bullish trend. We've got the bullish edge finder. So, yeah, again, UK 100 looks fine. What else is there? Not really much. We do see gold and silver getting bullish readings, but do we want to trade those? I don't think it's the right time, to be perfectly honest. And the scores are only 4. So 4 for me is just no-go. Excuse me. It's just too low of a score. It wouldn't take much to flip it back to neutral. Bit too precarious. And then pound Aussie. Is there anything on pound Aussie, though? So it's getting a bullish reading, but we've created a lower high here on the H4. Yeah, I'll be honest, there's really nothing to warrant this position. It looks very similar to what we looked at earlier on the Euro Aussie, where we've got this really nice fib pullback in this overall downtrend. So to be honest, the technicals really pull me towards going short, whereas the fundamentals tell me to go long. So because I'm getting pulled in 2 directions, I can't warrant taking a position here, sadly. Gold longs into August. Yeah, the gold seasonality does spot. I saw your message about the seasonality earlier, Modi, when I came on. I'm not sure if we discussed it or not. I can't remember. But yeah, seasonality on gold, I think, is quite supportive, as you can see here. But, you know, is it going to follow? Probably not. We'll see. But yeah, seasonality is one of those things. It is in favor for gold bulls, but yeah, I wouldn't say it's the best. Simo, hello. You've joined just in time for me to leave. So guys, enjoy the rest of your days. I hope you all stay safe. Don't get margin called and don't go anywhere because we have got Alan Perez, I think it's Alan, coming to take over the show. And to answer your question, where's Nick? Nick will be on, I think, just after Alan. So guys, stay safe. I'll see you soon. Thank you for being here. And yeah, I'll see you tomorrow.
Today's video is sponsored by 8cap. And did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. Good evening, good afternoon. Happy post-Fed day. Like the ad said, if you guys are looking to switch your relationship with your broker, 8cap is a great choice to have a 20% welcome bonus for a limited time. So make sure you go ahead and check them out if you are in the market for a new broker. But how is everyone doing today? Someone says right here, do you guys have the Edge Finder? Well, of course we do, man. Here it is right here, the one and only. Go ahead and check it out. There's also a 40 to 45% off summer sale right now. So just go on the website. You'll find that. Yeah. Definitely take advantage. Forex James, good morning, man. Hope you're doing well, or good afternoon across the pond. Kier, Max, hope you guys are doing well. What are you looking at? That's what this segment is for, man. It's post-Fed day. Lots of movement. A lot of things happened. It was actually kind of interesting. So you had like an initial reaction during the Fed day, which was a little bit of risk on, I would say. You had stock market up, you had gold up, you had dollar down. And then like an hour or two after that, things started to look a little bit different. I was really looking at the yield curve. So we'll go ahead and talk about all of that here shortly, but hope you guys are doing well. I'm curious to know your thoughts. Everyone in the chat, what were your thoughts on Fed Day, right? What was the net outcome? Hawkish or dovish? One in the chat if you're hawkish, 2 dovish. I want to know. Or 3 if you don't know at all, or it's a mixed bag. So let me know. But I think it was very, very interesting. The actual result of the Fed Day. Good morning, Ron. How are you doing, man? 1, okay. Hawkish. We got a hawkish in there. 1 dovish. 1 hawkish. Oh, okay. 1 is dovish. 2 is hawkish. My bad. Mix 3. Okay, well, let's talk about it, right? Let's talk about it. My kind of thought process here was the immediate reaction was dollar down. Okay, in fact, you also had the 2-year yield down as well by almost 1%, or I think it hit 1% at one point. So that was kind of like dovish Fed expectations kind of pricing that we saw. Then we saw the stock market actually rallied, but then 2 hours after, 1 hour after, everything started to kind of bleed off a little bit. And so that was the thing that caught my eye, which was this right here. Okay, where are you? The yield curve started to diverge. Okay, if you look at the 10-year in orange, I'm gonna make this bigger. If you look at the 10-year in orange and the 2-year in blue, you can see. Let me do this. Let me do you guys this favor real quick. Where are you? Epic Pen. Watch this. The 10-year went higher and the 2-year went lower. Now, usually you can see that they go in sync, right? Like lower here, lower here. You know, it went higher here, it went higher here. Very, very common for the yields, the spread between them to move in sync. But look at that. That 10-year went up and the 2-year went lower. And in fact, I was looking more, not so much at the 10, but at the 30-year. So let me go to the 30-year to show you. So I'm going to put this back where I was. Then we're going to go to this chart. We're going to go to the 30-year. And look at that bad boy. That one went right up. So what does that mean? Well, my thoughts is that immediately the market was pricing in, okay, this guy's not going to be super, super straight up hawkish. But the market was like, maybe inflation is kind of running behind or running ahead and the Fed's falling behind. And so that right there shot this thing up. So kind of 2-year versus 30-year. The 2-year yield is the 2-year average of the overnight financing rate that the Fed sets. This one right here, when you're looking at the 2-year yield, that one tracks Fed policy, right? When you see something change in forward guidance or something change in the rate expectations, the 2-year is pricing that in. That is what you're kind of looking at as far as a gauge. The longer you go in the duration, for example, on the 30-year, that one's not necessarily pricing in Fed expectations. That one is pricing in risk. Okay. How much does one want to get for holding US, right? How much does one want to be paid for holding US risk? So this right here, shooting higher, means that bond investors want higher premium for that risk, right? If they are super okay, if they have a lot of confidence in the Fed, if they have a lot of confidence in the US government and we didn't have a spending problem, et cetera, then they can hold on to US debt and probably take on less risk because they're confident. But if you become unconfident in something or less confident in something, you need more yield to carry that risk. And so the long end of the curve here went higher with a 30-year pricing in that, while the 2-year was like, all right, we're seeing like a little bit of dovishness. So to answer the question, me personally, hawkish or dovish, I think it was kind of a mixed bag. You literally saw that. Now, as the day progressed, you did see the 2-year yield start to kind of pick back up again. So the yield curves were more in sync. But that was like the immediate reaction. And while that was happening, you had the Nasdaq selling off here, the S&P, the Dow Jones was down like 2.2 or 2.19%. It was pretty bad. Gold too lost some of its bid. So, you know, during the actual Fed meeting, right, you did have gold tick up higher. At one point, I was like really happy with my position. I was like, you know, good thing I hold on to it. And then as you know, the yield curve started to kind of diverge there, gold gave back some of its gains. So I was like, oh crap, okay, something else is happening here. So that's kind of what was going on there. So my thing is like maybe the market is kind of not liking the dividedness, if that's even a word, of the Fed. It was pretty split. It was pretty split. So that's my thought process there. One thing I did see on the yield front was this. So let me go back to here. When I was kind of looking at other divergences in the yield curve for potential trade opportunities, right? Because that's what we're here to do, right? Is look at trade opportunities and see what's the best bet. I liked this right here. So along with the U.S. yields falling, everyone else was falling as well. You can see here that so this is kind of the point of reference here. I'm gonna put this dot here. So Aussie went lower, US went lower, Kiwi went lower, Canada went lower, but the pound went higher, right? The pound went higher with the US going lower there. So that divergence in those two yields between the pound and the US gave me a little bit of confidence, extra confidence in going long the pound basket. Now, I didn't go long the pound immediately as the Fed speech was going on, but I am looking for pullbacks, and I wonder if I'm even going to get the pullback. So let's see. Let's look at that. Let's go to Edge Finder. Let's verify that it's still a bullish reading. Let me refresh the page here. Let's see. Pound dollar still getting a very bullish reading. I love to see that. Pound yen still up there. Pound Swiss up there. Yeah, so the pound Aussies up there. Yeah, so we're seeing some pound Swisses up there too. You know what? Let me just do this. Let me make it simple. Let's just type in pound there. Pound yen, pound dollar, pound Swiss, pound Aussie, all getting a bullish reading. So that's giving me that confidence that the actual pound dollar itself is strong, not just pound US dollar as an isolated currency pair. So I'm waiting for pullbacks on pound dollar. I love the relative strength that it gave yesterday. You also did have rate decision today with the UK. Let me look at that real quick. Let me look for anything out of the ordinary. Okay, so UK. Bank rate stayed flat as expected. Vote hike. Okay, so 3 voted for a hike instead of 2 forecasted. Let's see. Let me look at the comments real quick. Let's see if there's anything in red. I doubt it. German CPI as well came in a little bit hotter. Okay, that'll boost the euro. But let me see. There's no evidence second round effects, but we cannot draw too much comfort from this. We stand ready to adjust our stance as the outlook evolves. UK economic activity is subdued. There's little of yet to suggest higher energy prices are embedded. You know what? Let me just look at their data. If they're going to be data dependent, let's look at their data to see what it looks like. Kier says, I took GU. Man, good for you, man. I wanted that one. One more for rate hike, Alan. Max, don't tell me that you went long pound, bro. Max always gets in at the best possible time. Let's look at pound real quick. Trending lower, actually. Inflation's trending lower for the UK. So that kind of, we'll see. We'll see if it picks back up. But that's actually a little bit dovish that I see there. Let's go to PPI. Elevated. Let's see, what else can we look at? Let's look at the labor market. Employment rate. Let's see if that's helped, because that was also a big pressure point for them too. Okay, US flat. We know that. UK is worse than US though. All right, let's look at recent terms. Equal surprise index. Pound's doing way better than the US. Equal strength. Real yield. US is still the king. Pound's up there. Neutral. Okay. So if I were to go long pound, it would be a short-term trade. It wouldn't be a long-term trade. Okay, especially as we get more rounds of economic data and stuff like that. That's kind of what I'm looking for. But I like this one to the long side. It actually handled the 61.8% retracement level pretty well. Let's look at other ones. Pound. Let's look at, what can we look at? Pound. Let's look at pound CAD. Okay, doing all right. I actually like this too. Upward trend. Is it getting a bullish reading? Let me make sure again one more time. Pound CAD. Ooh, nothing. Don't like that. Let's go pound Kiwi. Kiwi's up big today too, so maybe we can get a discount. Look at that. Nah, don't like that. Pound Aussie. Again, pound Aussie, I hesitated for good reason. We didn't overcome the technicals here to the downside. And they held pretty they held pretty nicely. So I'm going to continue to hold back on that until you see something different in pound Aussie. Again, what I'm looking for in pound Aussie, you need to overcome this level of resistance and this 200-day moving average. So I would need this. Okay. Break, retest, hold this level, and continue higher. Does that mean that I missed out on some gains by not being early? Absolutely. But I would rather miss out on this amount of gains than to just get in here and then take all of this loss. I would rather miss out on those gains, but then capture this amount of upside. Okay. It's called being smart and understanding your risk. So that's kind of what I'm looking for. Pound Aussie. I'm not going to scratch it completely. I'm going to keep it on my radar, but again, I'm not going to execute right now. Don't say that, Alan, you're short on Pound Aussie. Well, hey, what I'm basically saying is that we still have technical structure in place. So your positioning is still valid, max, until you see a break and retest. So that's all I'm saying. USD JPY. So we did see some dollar softness. I would assume we continue to see that. In fact, let's talk about that too. How did I miss DXY? If I look at US macro primarily, and I'm over here not talking about DXY. DXY here, okay? So we had this level of support, upward trend line here that we've been holding up quite nicely for some time. We get to this level of resistance here, this 101.5 and 102, and we finally we held this level again. So some people call this a double top. Who knows? I think it's too early to tell, but we'll see what happens. We did finally break this trend line. In fact, it's not the only time we've broken this trend line. We've broken it once slightly here, but it didn't really hold nicely. This one's a better, cleaner break, I would say. So we broke this one. Now, the next obstacle is this level of support. So if you look left on my chart here, this was resistance at one point. We broke out, and then this has been support for a long time. So we need to break this level of support, break, retest, and continuation lower for me to get really convinced at some DXY shorts. But until then, you have one of the two support levels broken, right? This upward trend line of support broken. Now you need this one. If you were to get this one, then you see some rolling over into DXY. And by then, hopefully, I can position myself in like pound dollar long, right? That's kind of what I'm looking for in the meantime. So if I can find an entry on pound dollar long and take advantage of this broader USD DXY weakness, if it does happen, I would love to do that. But that's kind of what I'm patiently waiting for. I do have my gold position still up. It is pretty flat today. Again, it was kind of chopping around yesterday, but I still like the idea for gold longs. The edge finder is still getting a bullish reading. So if you look at right here, gold is getting a bullish reading of +4. You also have, if you go to the weekly time frame, you can see that we are at a relative discount compared to recent price action, assuming that this level holds. So I do like that as well. And also too, looking at the yields, right? And what happened yesterday with market pricing in some uncertainty in the Fed, right? Uncertainty could actually have some pivoting into the dollar or into gold, right? If you have uncertainty rising in for holding US assets, US dollars, whatever, that could be a catalyst for gold inflows. So I do like that idea as well, that thought process. So I'm going to continue with this position. Nothing has changed. And then from a technical perspective as well, you are still above this bearish trend line. So we went ahead and overcame this one. You can see that during the whole war, this was a very, very solid level. We finally broke above it, retested, and we've been actually holding above this level. So I like that. From a technical perspective, I do like that for gold. We'll see what happens, though. My next level is 4,200. If we can overcome 4,200, then I throw my stop loss. And then the next one after that would be 4,500, this 200-day moving average. And then if we overcome that one, I throw my stop loss, etc., and keep going for as long as it gives out. But that's my thought process there for gold. All right, let me look at the chat here real quick. Your long euro pound, UJ long, Jeremy, interesting. So UJ long, I've said this before, I want to go long dollar yen on any meaningful pullbacks. So here's my thing. If DXY has a little bit more potential to roll over, then I'm going to be patient here on USD JPY long, and hopefully I can get in at like 160 if it continues to fall over. But again, I don't know if the DXY is going to roll over more, right? None of us do. So that's kind of my concern there is like you can miss out here, right? Like if this is the dip and buyers hold on to this and you continue to see kind of like, you know, the carry trade continue to take over, and also to the underlying kind of theme of like the safe haven of the US dollar during the US-Iran war, you know, it could be good to buy USD JPY right here. But if things start to unwind a little bit, then I could be missing out on a deeper discount all the way here at 160, 160.5. So I'm going to be patient on USD JPY. Also, too, we have to consider, Jeremy, that we do have BOJ today. BOJ today, So I'm gonna kind of just hold on to that, and maybe they can surprise us with something that can give us a bigger discount. Who knows? But that's kind of what I'm waiting for USD JPY. But to answer your question, David, USD JPY, I want to be a buyer of this market, but I wanted a bigger pullback. Okay, this is a strong trend. Don't get me wrong, but ideally 160 or 158 would be really, really good. 158 is my preferred because you have this 200-day moving average acting as dynamic support. So I like that one as well. Okay, Rabies has something for us here. Bank of England Government Bailey, which they just had their rate decision and their press conference here. If the Middle East conflict persists and we get second round effects, we will likely need to raise rates. That gives me even more confidence in this right here. I just need to pull back. So we'll see. We'll see. What are you guys' thoughts? Should I be patient like I always am and risk missing it? Or should I just buy it right here? I have my answer already, but I'm going to personally wait for like a 50 at least. Get me back to the 50%, and I'll take that all day long. Anywhere within here, I'll take it back, and I'll go long pound dollar. But for now, I'm going to be patient. I'm going to be very, very patient here. Guys, whereas Nick comes out in about 10 minutes. So 10 more minutes with me, and then you have Nick coming on with you. USD JPY is interesting. A rising weekly wedge on declining volume is a major red flag and most likely unstable without an intervention. I'm just hoping that USD JPY drifts lower and gives me that pullback naturally, whether it be BOJ raising interest rates or the US holding steady or a combination of both. I do like that idea. I want USD JPY to give me a proper pullback for me to be able to go long and then just be open to long. Because if they were to intervene, right? Let's say they intervene right here one time and they take USD JPY to 160 and I just buy the dip blindly there and then they intervene once more, that could put me at a loss. But if USD JPY gradually finds a strong level of support here because the fundamentals are kind of drifting in that direction, I would be more confident in buying it, if that makes any sense. Dollar bearish, gold is bullish. I agree with you, my man. I agree with you. DXY here continuing to sell off with gold. Gold is doing all right. It's kind of flat, but relative strength wise, gold's doing better than the dollar. So we'll keep looking at that. Rabies is seeing some hawkishness there in the actual BOE. Why did the dollar currently move down despite the Fed holding? Well, I can show you. There's a couple of reasons why. CME Fed Watch. Our good old friend CME Fed Watch. Tony, good day to you too, man. CME Fed Watch here. If we remember, let's go to probabilities. You actually had something change here. This is what happened. This is our current rate. And then this one right here is the rate hike, the next rate hike. The probability for the next rate hike is unchanged, September. But then you had December right here was going to be the second rate hike. And now the December rate hike is no longer in effect. So right now the market is pricing in one more rate hike in September, and it's going to hold still all the way until March of 2027. So the probability is kind of shifted slightly to the left, if that makes sense. So that's kind of what you saw there. And then you saw the 2-year yield drop during the Fed meeting, which that one tracks the Fed rate odds and the average 2-year of the overnight financing rate. So that one dropped lower. And so that's why you saw a little bit of softness in the dollar. But again, what was really interesting to me was the divergence between the short end and the long end. That one was a little bit of a mixed bag. It was like the market was pricing in slightly dovishness, but then the risk factor for holding longer U.S. debt was starting to get bid up there with the U.S. 30-year shooting higher. And so that was interesting. And then you saw like the Nasdaq continue to drop lower. Now it has rebounded since S&P as well, Dow as well. So it was a pretty big day. Do you think BOJ would take advantage of this dovish Fed? I think they're going to do what's in their best interest. They've definitely said that they're going to be mindful of U.S. and global macro, but I think they're going to do what's in their best interest. Let's see what Japan is dealing with right now. If they were to hike rates, if needed, they would need to see, for example, one of the economic data points would be higher elevated inflation. So let's see, is the yen, or is, look at that. Okay, so that could make sense, right? If you're seeing a trend higher in inflation for Japan, that could be a green light to go ahead and hike interest rates, to go ahead and tame that down. So that's one thing. Let's look at their employment numbers. Is that correct? No, that hasn't came out. I was going to say 0% unemployment rate. That's crazy. Doing okay. 2.5% is pretty solid. And then also, too, they do have, let's go to the Forex Factory real quick before I have to hop off. Let's go to Japan today. And they have their policy rate tonight, their policy statement, and their outlook. So we'll see. They also have a lot of other kind of unique, creative ideas to go ahead and help this weakening yen. Like, for example, some you can call it forced buying, forced demand into their pensions and stuff like that, right? That could help bring some yen strength back into the picture. So you have a multitude of things. I think for this thing to really make a meaningful dip lower, you would need to see an alignment of BOJ monetary policy, in their case, hiking interest rates, and then a combination too with the U.S. data also kind of getting neutral to dovish for you to see a meaningful dip in USD JPY. Right now, it doesn't make any sense for them to go ahead and intervene, because this intervention here was a little bit meaningless, right? They intervened, they dropped it. I think it was like, what, 2-3% right here. And then it was immediately walked back because of the underlying kind of theme of the market, which is the war in the Middle East, inflation fears, the carry trade continuing to dominate, et cetera, et cetera. Nick, how you doing, man?
Hey, Alan, I'm good. I figured we could, if you're game to just stick around for a few minutes, we have a bunch of data dropping here. We got, what are we looking at? We're looking at GDP numbers, PCE numbers, kind of an action-packed morning here. What was your, I missed part of your statement here this morning. Any huge takeaways from you with the Fed stuff yesterday?
Yeah, I think divided Fed, and I think that the long end of the curve priced that in, but then the 2-year yield was dropping. Yep. So, with the 2-year tracking kind of the interest rates now, and then the 2-year yield tracking like interest rates now, and then the longer the curve or the longer you go, that's more of a gauge for risk. So that was very interesting. And so you saw that like divergence happening, and then you saw like stocks falling, like the indexes falling, but couple hours after that, it kind of started to stable out there. But I wanted to get your gauge too on what was happening there. Was the market interpreting something that maybe I did not catch? Like I said, the yield curve started to stabilize a little bit, but in that little stretch of like 2 hours or so, it really started to spread out.
Yeah, it is really interesting because if we take a look at yields, as you pointed out, kind of the short end was like super volatile yesterday. Let me just see if I can switch over. Here's your 2-year yield. And I felt like the biggest thing that I felt kind of frustrated with, and I've actually been pretty positively speaking about Kevin Warsh in the last, since he even became, I've been pretty okay, I think he's a smart guy. And I do think he's a smart guy. But yesterday I found it a little frustrating that it felt like
deflection.
Yeah, I felt like he kept going back and forth on this concept. He would say, we're sort of instead of the words data dependent, he was being market dependent. He was super heavily leaning in on markets are very smart. They price things in real time, which I agree with. You agree with, we all know that. He's a markets guy in his background too. So yes, markets are really smart. So he would point that out. And then what he would do is reporters would reasonably ask following that, they would say, well, Kevin, or Senor Warsh, with respect, you just said that, and then simultaneously you're not hiking rates today, even though the bond market thinks you should. So, and then he would kind of backpedal and say, he's like, well, the bond market doesn't know all, you know, he would kind of, like, he didn't say it that way, but he would say, you know, it gives us clues, but we're not, you know, subject to what the bond. So I just thought that was kind of a back and forth narrative. He also highlighted, as you pointed out, he gave clues of the back and forth kind of division behind the scenes with a few members dissenting. So overall, I felt like what the market took away from it is that we are going to settle in here with a Fed that is much harder to read. And I listened to someone break this down. I thought this was really interesting. With Jerome Powell, and we've got, let me just react to these news data points, and then I got to come back to that thought, because that was something important I listened to last night. Anyways, guys, we have GDP numbers and PCE numbers dropping here. I'm just going to keep an eye on the chart, see if this does anything in the short term here. Stocks meagerly coming back up here. Nasdaq's also got a little bit of strength to it this morning. Bitcoin's on the rise. Dow Jones slightly up. Gold is recovering. Well, it had a good move, fell back down, recovering now. Dollar is lower again here. Silver also holding up okay, and oil kind of flat. Let me just see if I can get a read on those numbers. There's 1.5% on advanced GDP, so soft on GDP numbers. And PCE also soft as well on the core month-over-month read. So a little bit of softness there, although unemployment claims just a tad stronger than expected. So a little bit of softness on the USD data here this morning. But anyways, so what I was saying there that I think is kind of worth highlighting is that the volatility layout for Fed meetings now is very different. So let's say that this is a Fed meeting and this is a Fed meeting. Previously with Jerome Powell, a lot of the volatility would happen in between meetings where, you know, by the time the meeting showed up, everyone kind of knew what was going to happen. Like the Fed was very vocal in their press conferences and conversations, and they were very vocal about what they were going to do next. I heard someone explain that the new paradigm is going to be more like lower volatility for a little while, and then at meetings, we're going to have higher volatility because we're not as able to predict what the Fed is going to do if we have this divided Fed and this, you know, constant, we're not going to give you forward guidance. If you don't have forward guidance, then people are going to probably, like, volatility is going to build into meetings, if that makes sense. I thought that was an interesting way of thinking about it.
That makes a lot of sense. I mean, we saw that too going into this one. Markets were they're usually very quiet leading up into an event like this, but the price action after versus comparing the price action after versus the price action way before is way different. So definitely something. I like that take. I like that take a lot. Is there one that you're prioritizing, Nick, as far as, because you had a little bit of a mixed bag? So are you looking at the 2-year to get a gauge as to like where the Fed's going with interest rates, or are you more sort of focused on the long end to see what the market thinks as far as their confidence with the Fed? Are you prioritizing one or the other, or you kind of look at them kind of holistically?
That's a really good one to think about too, because I was thinking about that when gold was leading on the day yesterday. My thought process was maybe that's a little bit of like, wait a second, we have such a unclear read on the Fed, and maybe market participants, like you're pointing out with like the long end of the curve, maybe they're just a little bit nervous about like, is this Fed going to not hike rates when they should be hiking rates and talk it down when they should be? Although the narrative that Chris Pulver, when he was on the show with me, he was pointing out that he's like, there's also the case to be made that Kevin Warsh is going to speak hawkish and not act hawkish. And that kind of concept also, I think, is maybe being picked up on by the bond market, because you have, again, long into the curve being like, this Fed is supposed to be hiking, or could potentially, like, there's a case to be made that they could have hiked yesterday. I feel like it would have made sense. You have elevated inflation, although the pushback on that is you have core CPI, core PPI that was lower, which is healthy. So I don't know. I just thought it was an interestingly unclear Fed, and that makes things tricky. We also saw stocks drop hard yesterday following the Fed meeting. To be honest, that was a little confusing for me. The reason that we dropped so sharply right afterwards didn't fully make sense to me. But hey, I don't claim to know every single move and why it's happening.
Yeah, it was definitely interesting for me, and I think that reflected too in my chart markup for the day. I was like, I'm gonna write this very cautiously here, but yeah, man, it's a very interesting market to be a part of. This is my first time experiencing a transfer in Fed chair, so this is really cool for me.
Well, same here, I think. Well, same since I've actually cared about macro. So yeah, it's been very interesting to watch. Last question for you is, are we buying dips here, Alan? Are we looking at gold? Are we looking at stocks? Maybe from either a shorter or longer term view. I don't know if you trade or / invest in stocks at all. But I'm looking at this and I'm thinking, there's some parts of the market I wish I had built larger positions in things like software stocks because I like them for the longer term. I'm curious what your thoughts are on the dip here. Do you think the dip has a lot more room to dip, or do you think this is a spot to get creative and buy the dip on stuff?
I think the day after is a little too soon for me, personally. Ideally, I've been eyeing this level, 26,000 to /26.4, which was the previous kind of breakout to all-time highs. I think that would be a pretty solid level of support. You also have the 200 right there as well. And then from there on, at that level, you can see, do we dip below the 200? And then we're starting to see more bearish kind of technical signs.
Yep.
Or not. So that's kind of my personal read on, for example, like the Nasdaq. When it comes to precious metals, though, kind of like what you were saying too, I'm going to piggyback on that. If you do have market pricing and maybe like an uncertain Fed or like not the best level of confidence, in a way that could give more appetite to perhaps gold, for example. And if you just zoom out here on a weekly or daily, and you would assume, because I don't know, but if you just assume that this is somewhat of a bottom relative to recent price action, this could be a pretty good discount. So that's kind of my thought process. I do like gold. I still have my gold position running as well.
Nice.
I like the technical read, like, this trend line here to the downside. We've held pretty tightly underneath it. And for the first time since the war has been going on, we've now trading above it. The edge finder getting a bullish reading as well. Again, like the relative discount, looking at the price action. So I like gold, so I'm going to keep that one running. So this is my buy the dip moment right here. But when it comes to the equities, I'm going to be a little bit more patient.
I like the buy the dip on gold long term. I think so. Short term, I did get stopped out of my position. I think we talked about that. My stop was a lot tighter than yours. From a short term perspective, I don't love it here. I see what you've got with the trend line there breaking to the upside. I think that's definitely like something to keep an eye on. I would love to see from a shorter term perspective, I'd like to see us actually get above like 4150, 4200. If we can start to see some bottoming out on, this kind of channel that we're in, that would be great. Long term though, I'm still with you. I've got my I have an options trade on GDX, which is a gold miners ETF. I've sold puts on this. So if gold rallies, I am positioned to benefit from it. But we'll see. I think it's been kind of a crawl here recently. It's been kind of a chop fest, but I still do like the gold moves higher. I'm really interested, Alan, in the next round of like jobs data coming in, which is, I think in the next 1 week, we'll get more information on that. Because that could really kind of bolster, we're both Edgefinder fans here. That could really bolster our score even further. Because like right now we're sitting at 4. I do like a 4 reading. Would love to see if we got like inflation to stay relatively cooler than expected. And for example, if we had like some unemployment rate numbers and weekly jobless claims, if there's any weakness in the labor market that comes in, that's going to kind of get me even more off the fence and more willing to trade the upside. Because I do think, like, to me, there's a big chance, I don't know when, but there's a good chance that at some point you're just going to have these types of candles coming in on gold, and it's just going to be a rip to the upside. And I think it's a matter of time. We'll see.
Yeah, I like that too. A stronger reading. Again, you do have, in a sense, like the fundamentals pointing in that direction for gold, but then you just have this blanket theme of like the war in the Middle East, inflation fears possibly coming back, depending on how long that goes on. That's kind of weighing it down. But yeah, to your point, from a trade perspective and following this thing and letting it ride out, 4,200 is one obstacle, and then after that obstacle would be the 200. So depending on what happens there. But if this thing starts to just trade flat, I'll probably just take profit at 42 if we get to 42, and then wait for something different or something improving.
So I just had a thought too, Alan, while we're on the fly here. Someone pointed out, thank you for this, ADP is on the 5th. I think it would be cool to add an update to Edgefinder. I don't know how I'm going to fit it on the screen here, but I want to add dates to this stuff more relevantly. Like, I think it would be cool if like you could see this number, like when did this number come in and when's the next number coming? That would be really cool. So I think I might contract up a little contract with the developer behind the scenes, see if I can get something built there.
Yeah, that would be nice. That would be nice too. And just to see like how recent that was, right? Like
Yeah.
how relevant it is. If it's super old, then maybe not. But I like that idea, man. But I'll go ahead and pivot out here, let you do your solo segment. Thank you for the conversation. It was awesome.
Yeah, thanks for the conversation, Alan. And we will see you on the next one, man. See ya.
All right, man. Take it easy.
All right, guys. So stick with me here. We'll take a look at some charts here. So again, I am very curious to see in the coming weeks with new jobs data, which again, I'm fixated on that concept. I would like to get some more dates added into this table. It will happen eventually. It'll probably tighten everything up on this page a little bit so I can fit some space in here for some dates. I feel like that would be a useful improvement. So let's talk about my the goods and the bads this week. For me personally, first of all, I had a couple really, like this week, I posted in our Discord that I had, let me see, where are we at? I posted that I had 2 losing trades on a short-term basis. I went long, or I stopped out of my gold longs and I stopped out of oil longs. Fortunately, though, this week has been really good on the options trading side of things. I sold cash secured puts on Robinhood following the earnings. They have gone pretty much nowhere. Actually, they're slightly up here this morning. So that trade is looking really good. I also did the same on Microsoft, which obviously Microsoft is exploding higher here today. So that trade worked out very, very good. So I've got a couple winners here to talk about. And then, of course, my US oil trade, which did not work out so well. I was thinking that we could get a little bit more of a hold here at this 38.2% retracement. Ended up stopping out. So I'm no longer in that trade and kind of just watching from the sidelines. Let me just take a look really quick at oil, see if I still have, I don't really have the same conviction at this time on oil. Getting a +2 score within Edgefinder. Fundamentals kind of on the lacking side, so probably not going to re-enter that trade idea at this time. One thing that's interesting to me is Chinese stocks are actually kind of ripping to the upside, and I have been watching this from the sidelines. The chart looks interesting. It looks like you've got kind of a breakout taking place here in Chinese stocks, which are not something I've traded in a while, but like something like FXI on a pullback might actually be something I'm watching. Let's see, what else am I looking at? The DAX is also getting a very solid reading right now. And if we take a look at the DAX, German 40 here, we'll use the CFD just to get an idea of what we're looking at. You're sitting kind of hugging the all-time highs. So I'm not opposed to the idea of like a break and retest kind of approach here. If the DAX gives us that, I am interested in potentially getting long the DAX for kind of a momentum breakout on that side of things. So a couple ideas floating, nothing like at the ready for me. If I'm looking at stocks following yesterday's move, let me look at S&P 500. S&P 500 is getting a +2 overall score. Now, I will say part of the reason the score bumped up here is because crowd sentiment yesterday was super bearish. I don't think that's going to be a super big surprise to anyone, given that yesterday was kind of a bloodbath in stocks. But check this out. We saw a significant surge in put volume yesterday. So on our put call ratio tool, S&P 500 saw a lot of bears rush in. So a lot of people bought puts yesterday. A lot of people got very nervous yesterday, getting scared, betting against the market. And that is a lot of times a signal that I like to pay attention to. This alone doesn't tell me to buy stocks, and that's all I needed to do. But it is something that I add into my analysis, which of course is made in part automated with our asset scorecard feature. So you can see that sentiment is giving us a bullish reading. Why? Well, because we can read it right here. Crowd sentiment is bearish, giving a contrarian bullish signal. For most assets, this signal is due to a high put call ratio due to puts being bought aggressively. So yesterday we saw a lot of fear come into the market. And so when I look at the S&P today, I'm interested. I'm not quite bullish. That's why I say I'm really interested in the next round of economic data, because if we can get, for example, let's say some solid economic growth metrics, there's a good chance I'm going long the S&P. Right now, I don't quite have that signal. Manufacturing and services PMIs both missed expectations. And again, this is going to irk me. I really wish right now that I had the next upcoming date to know when this data could potentially change. I do have something kind of like this. If you guys are Edgefinder users, if you go under your economic heat maps, we do something kind of interesting. We have this, if it's in yellow text, what that means is that it was reported in the last 7 days. So you can see we've had kind of a dry spell, a lot of grayed out numbers that have not changed in the last 7 days, right? So we've got more economic data coming. We had kind of a dry spell here, but this week we are still on watch because today, guys, we have more massive earnings. Today we have the leader of the pack, Apple, reporting their earnings after the bell this evening. I'm probably not going to place any trades on Apple today. But who else was it? There's one other one. Amazon. Amazon is also. So I do own shares of Amazon. Shares of Amazon here are actually up in the pre-market a little bit, which is nice, up 3%. But today they have earnings. Apple has earnings. So you have don't be fooled. You have quite a potential movement day today. Just a quick look also at Korean stocks. Korean stocks had just such a bloodbath of the last month or so. This thing, the Korean stock market itself is down 40%. Absolutely wild. I think that's playing a large part in the broader semiconductors in the United States showing some weakness. Down 25% at one point. I've talked about this from a pullback perspective. I highlighted in my video yesterday that if you give me that 200-day moving average on a pullback on semiconductors, I don't know if we'll get there, but if we do, I'll probably buy the dip on semiconductors carefully and slowly and in small quantities. Semiconductors can absolutely fall apart. Like they can break. Like if you think this is a lot, understand that semiconductors frequently have 30 to 40% pullbacks as a collective group. Infrequently, but also possible, they crash 90%. So I think it's good to keep an open mind on semis. So if I do take the trade, I think it's a good risk reward bet to the upside, that at like a 30 to 35% pullback on semiconductors, I like the idea of betting the continuation of the AI story, in which case I think you have to have some semi participation. Although, to be fair, I don't know that that's necessarily true. So let me back up and say that differently. We kind of said the same thing about the software world. You can't have the AI revolution without the perpetrators of, or the I don't have a vocab word for it, the people who are going to distribute, the distributors of AI, which many people thought were the software companies. By the way, I still do. I think that software companies are the medium in which AI goes to people. Now, they objectively are right now, but people are worried that they're going to become less relevant, that Anthropics and ChatGPTs and all these things will disrupt these moats of these companies, that software companies will, anyone can start a software company because you can just prompt AI. I work on software all day long. I'm a software engineer by trade. I build these tools with my team. That is nonsense. There is so much more to building tools than just writing code. Okay? Yes, writing code has been made easier. That's not the stuff that sells the software copies. Take it from me, I run a software company. It is not that easy to just prompt AI to build strong, powerful software that also interfaces well with human beings. At the end of the day, people want to buy stuff and use stuff that helps them to achieve a goal, keeps things simple. It's about the human psychology of software, the layout. Anyways, if you can't tell, one of the most bullish calls for me longer term is software stocks. I'm just telling you my opinion on this because I could be completely wrong. And 5 years from now, software stocks could be down 80% from where they are. And you could say, that guy, Nick, he was an idiot. Go for it. But I think personally that if you are looking to invest in something, you should invest in something that you feel you know a lot about. I don't claim to be the software expert, but I feel that software is something that I'm very actively engaged in every single day. I like software as a investment class, investment area, and I like it a lot more now after it's gotten crushed than I do. And I guess you could have argued it was a lot more crushed, a couple months back. So that's my opinion. Again, I could be dead wrong. And even if I make these, or as I make these bets that I think certain software companies will do quite well, I'm not risking my life on it, right? I'm not risking a significant, massive career-ending drawdown if I'm wrong. So please understand, there's some context for you. First of all, I'm not telling you what to do with your own account. I'm also telling you what I am doing, which is I'm playing it slow and steady. I like software generally, but I'm not going all in, and I never think anyone should do that. So please be careful. I'm saying that, I'm clarifying that because I am very obviously passionate about that opinion, but I also recognize as a trader, as an investor, it is very, very important that you hold on loosely to strong opinions. What I mean by that is manage your risk. Vibe coding creates so much code liabilities. It also takes a professional to design meaningful, stable solutions. AI agents can't do that. The more you use AI, the more powerful and stupid you realize it is. I'm sure many of you guys, I know there's a lot of programmers who watch my content. To my fellow programmers out there, I know that makes sense to you. If you use it for coding specifically, you realize that it is both brilliant and stupid at the same time. It still requires, the best analogy that I can think of is it's like a wicked, awesome, all the bells and whistles car, but the car still needs a driver. The car still needs someone to help it navigate, to tell it where you want to go. What do you want to do with that car, right? Cool, you have a great car. It doesn't mean anything if you don't have directive to use that car. I actually like this analogy more, which is it's like a tractor, right? A really strong farmer, or a farming tractor. That tool is in the hands of the right farmer going to yield abundance, but you still got to know how to use it, put it to work, etc. Anyways, I love AI as a proofread for my code, checking for potential null pointers. Yeah, I mean, there you go. We got some programmers in the building. Is anyone here let's see, a legacy programmer, meaning you actually know how to write code, not just vibe coding? Which, by the way, I say that as if I write code. I don't write code anymore, ever. And I went to school for that. But I can still look through code and kind of get a general understanding of it. But yeah, no, it's the days of like writing syntax for me are over for the most part. Yeah. Okay. So we got some programmers in the house. Cool. That's my take. I think software businesses are going to pivot. They're going to adjust. And they're going to stay the window in which you can access everything, AI, internet, etc. CoderNick. Alan, I actually was a pretty bad programmer, but I've said this before. I think I went from being kind of the not as good type of programmer, because I was never like a brainiac programmer. I'm not a good coder, technical speaking. However, with AI, I think I'm probably one of the better types of programmers now because I have a pretty creative brain. In that, I feel like is nowadays, if you are a programmer that has a creative brain, that is, think about like a lot of people in the programming classes that I was in, very brainiac, but couldn't really think for themselves, not very creative, and like super nerdy. Nothing against being nerdy and all that, but people that don't have any creativity or personality, I actually think those types of programmers are the ones that are more in jeopardy than the people who are like creative thinkers and who not only are technical, but can actually like dream up really cool stuff. Those are the best programmers nowadays, in my personal opinion. Okay, sorry, I'm off track. What do you think about oil now? Yeah, so oil, I have a neutral reading on. I don't have enough conviction to be long or short oil. I'm just watching it because I think that it is Mark who was it? I think Max pointed out in the chat. Max, if you're still here, thank you for saying this. After the Fed meeting, was there something geopolitical that took place? Is that what I was missing? You know, because I mentioned that I was a little confused that like very shortly after the Fed meeting concluded. I mean, I want to say like the Fed meeting concluded right around here, and we just proceeded to drop hard. I don't know if that was geopolitical, but I guess we could check oil to kind of confirm that theory. Because at that time we did get a little bit of a spike in oil, but not massive. Like you can see it was a move 1% higher, but stocks moved like violently lower. So anyways, I don't know exactly the reason. Sometimes you don't necessarily need to denote every single 5-minute candle, other than maybe people just wanted to de-risk going into the Microsoft Meta earnings. Maybe there was a combination of this Fed is kind of hard to read, and maybe it's better to just raise cash and sit on the sidelines. Maybe it was some algorithmic trading. Assign your favorite reasoning for that, but you had a very sharp move lower. Yeah. Nick, if there's a real chance you could be dead wrong on something, maybe it's better not to go down that path at all. And if you absolutely have to go in, you definitely need a hedge. Yeah, Belinda, I mean, that's the thing is, the way I would kind of, that for every idea, every single trade, every single idea, I believe it is really important to acknowledge that I could be dead wrong about it. Because if you don't think about that with every trade or every investment or whatever, then you could fall victim to that worst case scenario happening and you have no plan for it. So yes, you could hedge, right? That's one thing that you could consider doing. The way that I like to do it, generally speaking, is just size accordingly. If you know you never know with certainty what's going to happen, then size your trade or your investment accordingly to fit your risk profile in case the worst case happens. So for me, if I think, software is going to do really well, but I acknowledge that I could be wrong because I'm not a genius and I've been wrong before, and everyone is wrong at some point in markets. If I'm wrong in that theory and these things drop by 60% over the next 5 years, then what can I do? Well, hedging would also including keeping, like, another way of doing that is like to diversify, right? So I'm not going to go all in on software. But I still think that software stocks will do better. I think that. I don't know that, right? We never know. It's the same thing like if you're watching crypto, if you're watching stocks. Like, for example, crypto has been a really rough place. If you were somebody who was fully convinced that, crypto is going to the moon, it's never going to come down, and put your whole portfolio in it, this has been a very painful period. Even though the stock market has been pressing new all-time highs, crypto's down 50%. So if you are all in on something, yeah, you're right. That is essentially you have no hedge, you have no backup plan. And I think it's always important to have a backup plan. So I like, for example, I like long-term, I like gold. I like software stocks. I even like dividend stocks and consumer staple type companies. But generally speaking, I'm also kind of cautious on stocks in general right now. So I wouldn't mind some further dips if we get them. But yeah, I figured, it is important to acknowledge you're never certain about anything in markets. And if you can embrace that, you're going to be better off than the new trader who is certain that gold is going to do this or the S&P is going to do that. So be careful and be prepared. I think, preparing in trading is really big. Understanding okay, I have this thesis. I don't have this fact, right? That's the difference. So yeah. Anyways, with that said, guys, we have our next show host, Miko Audu, coming in just a quick minute. We're going to play a quick ad break, and then we are going to let him take over. Real quick, before that goes, just a last call on the 40% off discount sale that we're doing right now. If you're interested in getting access to Edge Finder or our VIP group, all of it is currently 40% off during our summer sale event. If that is something that you are interested in, right there, scan that QR code. What that will do, you'll be connected to a real person on our team. They can set you up with a payment plan if that's something that you need. They can get you the top available discounts on the sale event before it ends. You can ask questions about the tools, about the VIP memberships, etc. Scan that QR code. I'll also drop the link here in the chat for that. Hold on. There we go. There you go. Okay, so if you have any questions, if you need to set up a payment plan, etc., there's the link. Click that to speak to a member, a real person, not a robot, on our team about setting that up. With that said, guys, thank you very much. Don't go anywhere because our next show host is right around the corner. We've got Miko Audu taking over after this. Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show.
Okay, what's up, people? Hope you're all doing well. Glad to be back on the stream. As always, I'll go through a bunch of markets which I'm looking at, which I'm currently trading, which I'm planning to trade, and of course, just general thoughts on what's happened and what I'm kind of expecting to come. If there's any recommendations, any markets you're looking at, feel free to drop it in the chat. More than happy to take a look. But I've been pretty busy in the markets. I've had a few positions, some swing positions in the background, and some more active day trading opportunities as well. I currently only do have one position live at the moment, which is some longs on pound USD, which I took a few hours before the interest rate yesterday. So yeah, thank you very much for the news. But yeah, in some profit now, still looking for a bit more upside. So in terms of managing the trade, who stops the break even, taking partials, is pretty much either price is going to come against me or it's going to go for me. At that point in time, I'm just going to let the market do its thing. There's not a lot of room for me to work with, really. But I have had some shorts in Aussie as well, which is quite interesting because I was short Aussie, but I was also long pound. So kind of no matter what was going to happen in the news, one trade was probably going to work out and the other was going to fail, or potentially reverse my profits, because Aussie was actually floating some really good profits prior to the news, but then the news came out and price did turn against me, but I already locked in some gains. So this one I closed with a small win, but not really interested to get back involved. The price action is very, very choppy. And New Zealand CHF, I did get taken out break even here as well. Again, this was the reaction post the news yesterday, went to break even, and price took me out this morning. But yeah, at the moment, do have some longs on pound. I had some nice shorts on dollar CHF this morning as well. But going into next week, I'm very much looking to keep shorting DXY, keep shorting USD, longs and other USD majors pretty much. Yeah, most of them, probably dollar and I'll skip, but Euro USD pound, they look pretty attractive. DXY in terms of the price action, really commanding move down, but there is some red flags. And what I mean by that is that there's a lot of support below us. So I would be very cautious about any aggressive shorts right now, especially entering at current price, because as we can see, if we look to the left, there's a lot of evidence of buyers getting involved at this price, and we've seen a lot of upside here. Who's to say we can't see price push up again? If price is going to break through this zone, which I kind of do expect price to do, but I'll believe it when I see it, sort of thing. If we can see price break through that, this opens up the door to a lot of short opportunities, particularly maybe even throughout the entirety of August. I'm looking at the higher time frames for the DXY just to kind of see what the bigger picture is. And I've been looking at this range, which we've had a really nice breakout of, but it looks as if we're just failing to see that follow through. You can see a lot of consolidation there. If price is going to continue higher, if this breakout is legit and price is going to continue higher, yeah, I do want to see resistance break here, which we failed to do this week, this month. And if we do see price come crashing back down, back within the range, so back below that resistance level, well, I kind of expect us just to trade a little lower, maybe even push to the opposing side of the range, which would take us all the way to 97, which would be a very big move. But again, that's probably a discussion for another day. I think the midpoint of the range is probably your safe bet, which is around here. If we do come crashing back down, there could be some downside to 98.5. So August, maybe even September, some really nice pullback opportunities, hopefully. But we're not there yet. Like I said, we need to break that support level, which we still need a lot of effort to do that. Perhaps we do get it, but I'll wait and see. If price does hold support here and starts to push back up again, well, we're back within the range. And then, yeah, the long-term kind of view of the dollar just becomes very skewed for me, especially just looking at price action. We're just chopping around. We might still break higher. We might still break lower. I don't really know. But if we do break lower, then yeah. I mean, nothing's guaranteed either, but shorts become really high probability. So longs and pounds, euro, that becomes a theme pretty much for August. But yeah, in terms of swing opportunities, I don't really have any swings apart from pound USD, just because looking at other markets, I don't think they're quite there yet. I mean, looking at euro USD is essentially the mirror opposite of the DXY. We've got a lot of resistance here. I don't really want to be buying into that until I see evidence of price really breaking through, and then maybe something like this could become interesting next week or the week after. Dollar CAD looking really bearish as well. A lot of downside there too. I think we're probably going to take out these lows here. We've had a nice pullback this week into some structure. Markets reacted pretty well. Of course, we just had the Fed come in, and that gave it the kind of the nudge or the push to kind of really get moving. But there is a lot of room to the downside for dollar CAD. I actually spoke about dollar CAD in a lot of detail last time I was on the stream here. I said there's probably room for us to push back into the kind of the midpoint of this range. Support below us, resistance above us. This is kind of like price testing the extreme of the range, essentially failing, and I would expect us to return closer to the midpoint there as well. Okay, we can. Hey, what's up, Bashi? Hope you're doing good. What is up? Long time no see. Hope you're doing good. GJ, yeah, absolutely can take a look, no problem. Mika, why are you talking to a wall? I'm not too sure, Stephen. I'll get back to you on that one. I appreciate it. Yes, we'll go through UJ and GJ. I'll take a look at gold as well. If there's any recommendations, by the way, stick it in the chat. More than happy to take a look. But yeah, UJ, I'm just not a fan of UJ because of the positioning of everything and the fact that we could just see a very impulsive move come at pretty much any second here. Well, not any second, but you know what I mean. It could happen at any time. Really aggressive sell-offs. And that is just really kind of awkward if I'm looking to follow that trend high, because if I'm going to trade UJ, I'll probably just trade it for the session, like the US session or even London. I probably wouldn't even try and hold it for the day, just because the longer I'm in the trade, the higher the probability that one of these moves do happen. And especially if you're trading intraday with tight stops, you know, it could get pretty ugly if you do get slipped, or I mean, if you're trading without a stop loss, it could get very ugly. But even with a stop loss, things cannot go according to plan. But yeah, UJ, with this move, I would just let things settle, to be honest, because I don't know if this move is over or if it still does have a bit more juice. I mean, really aggressive wick. USD looks like it could be leaning a bit more bearish. I don't know if JPY is going to change or continue being weak, but I would let things settle here, probably until early next week. Really strong move down. I don't know how much more we're yet to see, because the plan would be, okay, if we're going to see some strength, the plan would be some intraday pullbacks and some shorts. But I'm not too sure if that's the case. If price has just come back into structure, is going to absorb that and is just going to push right back up again, and the trend continues. I can see pretty much both of those situations happen. So I don't have a concrete outlook or concrete bias yet with UJ. GJ is interesting. I think there's a bit more there with pound yen, although same situation, we could still see, you know, dramatic sell-offs as well on pound JPY as well. But if price was to break this level here, I would become very, very bullish on pound yen. If we can break through that level, I'll be looking for a push back to this high, which is 219.5. And I probably would expect higher highs past that point as well. Below that, things are awkward. There's still room for us to pull back deeper. If GJ wishes to do so, there's still room into 217, 216.5. And again, we've seen some rejection there as well. But if we can break that high, I would be pretty, I would expect us to continue back to the high. Of course, would have to see how we break it. If price was to break and come back down, that will be, that wouldn't give us much confidence. But if we can see a strong close above, especially in the 4H, I think intraday, the buys back to the high make a lot of sense. So if I was to pick between the two, UJ or GJ, I think pound yen is much the cleaner or clearer pair, especially if you can get the break of that high. I'll take a look at gold. Gold's been really awkward. I'm not the biggest fan of gold, to be honest. I mean, I'm looking at buys for gold. I do think the bigger move is higher. I just don't see any crystal clear opportunities to buy it just yet. And that's purely looking at the price action. I'm looking at this as just a range, really. We're kind of squeezing a little bit now because it looks like we're forming higher lows, but at the same time, we're forming lower highs. So it's a situation where we might consolidate, and then eventually when gold makes up its mind, you know, we might catapult in either direction. But I say I'm pretty bullish on gold because I'm looking at the higher time frames. Excuse me. If I look at the weekly, the daily, I do think price is running out of steam. We're looking a little bit exhausted. You know, we're testing some major areas to the left there, and you can see a lot of wicks accumulating in this area. So quite clearly, price is finding support. We're pausing here, and there is room to the upside for, at the very least, a pullback. I'm not asking much for gold. Gold doesn't have to run all the way back to highs. It can pull back for a few weeks and continue to sell off if it wants to, but I'm not interested in the sells. I don't think there's much opportunity to the downside. Of course, you never know, but at the same time, when I'm seeing all these red flags, seeing all these signs that price is tiring, is exhausted, I want to take the counter move. I want to take the move higher. So I'm pretty bullish for gold, but until I see structure start to clear, so price break through some structure, of course, we'd have to break through that one as well. But until I see price start to take out highs, I'm going to be very reluctant to find any buying opportunities, because even if we are forming higher lows, or looks as if we're forming higher lows, I won't be too surprised if we come back to resistance and price comes straight back down again. So this move here is quite critical for me to be looking for any buys or have confidence in any buys, especially from a swing perspective. Intraday, it may be a little bit different, but to be honest, this is really, really choppy price action. I would avoid intraday opportunities here unless you're going to be very in and out and you kind of maybe looking for like mean reversion opportunities. But any kind of trend following in here just doesn't make any sense, just because there's not much of a trend. But yeah, suppose we do break high. Yeah, this becomes a nice opportunity. and I'll keep an eye on that. And of course, if the DXY can do us a favor and break lower, then hopefully that will be like a nice catapult or a launch pad to get gold going. With a bit of USD weakness, maybe we can see some gold strength on the back of that. And pretty much the same price action as well for silver, doing the exact same thing. It looks like we're forming another higher low, but at the same time, we still do have these lower highs in play. And I want to see them go first before I take the trade. And that's kind of the way I look at the market, especially when I'm trying to go against the trend, against the larger trend. I'm not trying to call the bottom, and very rarely am I trying to call the first higher low. I'm always waiting for evidence that sellers or buyers, depending which way the market is trending, but I want to see evidence that the trend is fatiguing. And the best way to see that is structure being taken out. If the market's consistent with lower highs, let's wait for that consistency to break. Let's wait for a higher high. Very, very simple kind of I don't know, how would you call that? Theory, waiting for highs to go or lows to go, depending on the trend, but it's very, very effective, and it keeps you out a lot of losing trades, especially if the market just wants to continue the trend, which it could very much do so. So yeah, gold, silver, I like the buys, but I do think it's a bit early, at least for me anyway, to be looking for opportunities. Okay, I can take a look at the Nasdaq as well. Yeah, that's the issue. VJ got 3 times. So I'm just waiting for clear narrative. Yeah, I think that's the best way to look into it, because they're very volatile, and especially if you're trading intraday as well, you got to be super, super careful with that. That's one of the perks of swing trading, especially on the yen pairs. You get that larger room, that bigger stop loss, which gives you a bit more breathing room if things go wrong. Intraday, of course, you can really maximize the risk reward and capture some nice returns. But there's a cost of that, and that's the minimal risk. And if things become volatile, the yen does something crazy, it's you don't want to be on the wrong side of that. In terms of the Nasdaq, interesting, a lot of downside this week. We're testing some areas where we could see price bounce. I'm not necessarily going to be calling higher lows or this is the low, because I have genuinely no idea. But I do like the way we've gotten there. I do like the way prices are reacting. A pretty healthy pullback. We had a really exponential move a few months ago. And this to me just looks like a healthy retracement of that. And now that we pull back into some structure, and you can see the way we've got there, it's really corrective. We haven't seen any aggressive selling pressure. It's not like prices being bearish candle after bearish candle. It's quite choppy. And now we're seeing some strength come in. So again, taking that same lesson or same idea I was speaking about on gold, I would wait for price to do something like this first. Take out some structure as well. That'll be absolutely amazing. If we can take out that high, even better. But I want to see some evidence of higher highs forming, some momentum forming, and some highs being taken out. And then the trade becomes really simple, because after that, I'll be looking for pullbacks, corrections, all the way back to this high, that high, so on and so forth, back to the all-time highs. Because especially with the indices, my game plan is always looking to buy really. Very rarely would I try and consider a short. Very rarely would I try and consider a short. I'm always looking for price to put in that low and then take the pullback opportunities as price continues higher. And we've got the pullback opportunity. Now I want to see the bottom form, and the best way to kind of identify that, at least in my opinion, is waiting for some strength to come into the market, but also some highs being taken out. The more the better, really. And then this becomes some simple trades, basically just waiting for a pullback and then buying the higher low. Of course, not that you're guaranteed to win every position, but the idea becomes simple. We're not trying to do too much or trying to overcomplicate things, because there's no legit reason why this has to be the higher low. There is still room for us to keep falling. There's a massive level at 26, 25K. We could still see price pull back a bit deeper. So I would wait for the market to show its hand first, show some strength from the buyers, break through some structure, and then the pullbacks just become very simple after that. And that's really my thought process for a lot of the indices. Same thing for the S&P as well. Wait for that strength to come in, wait for some highs to go, and then the reverse becomes very, very simple. Something like this. And of course, we've got structure there. We've got the all-time highs there. I do think Nasdaq looks a bit cleaner. I would have wished the S&P had a slightly deeper retracement, because really this is just a pure range. But the same principle does still stand as well. Okay, I'll quickly go through dollar CHF. What about oil? Okay, can take a look at oil as well, no problem. Avoid the chop. Gold rewards the patience. Absolutely. I mean, every market rewards patience, but gold is going to be testing a lot of patience, a lot of people's patience right now, because I do think there's opportunities there, but at the same time, I don't think the price action is ready yet. And I think that's the most important thing, especially when it comes to entries, because you might be right in the direction, but if you're entering too early, the market's going to punish you, and you're going to take unnecessary losses when you could just be a bit more patient, wait for the market to show some evidence first, and then follow that momentum afterwards. In terms of dollar CHF, yeah, this one's interesting as well. It's not a USD pair which I'm going to be looking to trade that much next week. I mean, I did have some nice shorts this morning, but they were intraday, and it was kind of in and out sort of situation. And the reason why I say that is because we've had a lot of upside, and now as we push lower, we're coming into some structure which I don't really want to be selling into. Even if DXY is going to be super bearish and USD is going to be super bearish, we're going to be falling into structure, and this is where things get awkward. Maybe some deeper pullbacks come in. I don't expect to see clean momentum on the way down. It's all about the path to your target. How clear is the path from entry to your TP? If it's relatively clear, you can expect relatively clean price action. If it's really choppy, a lot of resistance, support in your way, you can expect price to ricochet, rebound off levels, maybe come back and hit your break even, and withstand some kind of deep pullbacks as well. And that's kind of the situation I'm expecting for dollar CHF. And I do think there's just cleaner USD pairs out there. So that's why I'm not really keen to trade it as much next week. But to be honest, in terms of the market structure, especially intraday, I think we're looking quite good here. I think if you're looking for some shorts back into structure here, this becomes a really sensible trade, and then back into lows, back into support, and call it a day. So another just pullback continuation idea. This is the area which I'll be careful with, because I could see some buyers stepping back in. It is a bullish trend after all. I'd wait for us to take out these lows before I would say, okay, that trend is over. Shorts become a bit more high priority, but right now there's still support below us. But yeah, we are looking pretty bearish. It does look like we're topping out. We are forming some lower highs now. So the plan is pullback and more downside. Pound USD, same situation there. As I mentioned earlier, I do have a long position here, which I might look to try and add. I might try and look to add probably tomorrow. I mean, if it just shoots off now, great. But I like this zone just below us here. If price can correctively get there, maybe tomorrow London, there might be a nice buy off this. Basically the same idea we spoke on dollar CHF, just the other side, and try and take that back to resistance, back to highs then, and really take advantage of that opportunity. But the way I see it for pound USD, especially if you look at the bigger picture, we're very, very flat. We're very, very choppy. So ultimately, we're trying to buy low and sell high until price makes its move above the range high, above the range low. I'm not really too confident about direction, period, to be honest. I'm just looking for the short-term move, which is really why my targets are still very modest. I'm not looking for highs up there. I'm kind of just looking for halfway, just because I don't really believe, I don't think believe is the right word. Not really. I'm not confident to hold for full swing. Just there's nothing to compel me that price is likely to get there. So targets around the midpoint, you can really see some evidence we're struggling. But that looks like a reasonable take profit for me. But yeah, in terms of pound, I'm really liking the strength coming in. We've seen a lot of corrective behavior for the past 2-3 weeks on the way down. Looks like price has bottomed out. We've come back into a nice zone to our left. And of course, post news, we've seen a lot of strength come into the market. I do think there's more upside to come. Maybe not much more, but I am looking at this zone here, 1.344, which we saw a lot of strength from. I think that was last week. I do think we can see a bit more upside to get to that zone there. It lines up with some resistance to our left. But in terms of opportunity, I think the best opportunity, as I just spoke about, is intraday, keeping it short and sweet. If we can hold this low here, I think that's a fantastic place to look to buy. If that low breaks, then we're probably going to end up back at support, and that becomes a different situation entirely. So this zone is quite important, 1.335. If that can hold, buys look good, back to highs, and probably call it a day there. And of course, keep a close eye on the DXY as well. You want to be seeing the DXY respect structure as well. I don't want to see the DXY breakthrough here. If it does, I don't expect the pound USD trade idea to play out as well. So yeah, that is no problem. Okay, let me go take a look at oil, because that was mentioned before. So oil, I was actually looking at oil yesterday on my stream. I said I'm not in love with the price action. I am bullish. The market is pointing up. We've seen a lot of upside, higher highs and higher lows, etc. So I do think buys make the most sense. And of course, since the news and since yesterday's price action in general, we have seen some more evidence that price is pushing higher, or at least trying to do so. I am liking this gap here. I do think there's a good chance we could fill that, or at least test it anyway. And I like this zone here as well, because that's where a lot of strength came from yesterday as well. So that becomes a very sensible place to look for entries and to put stops below, because of course, if price was to break through that, well, I would say the odds of us coming back to that low are pretty high. So from a bullish perspective, you'd want 83 to hold, this area to hold. And if we can get there, show some nice rejection, some nice wicks, I think that's a great place to buy. And you're looking at a really nice range there to trade. Even if you really want to push the trade, you've got the highs there, but I'll be a bit more skeptical with that full swing idea. A push back to this zone looks pretty reasonable. If you're bearish, then you'd want to see this zone break, and then you're looking for the pullback after that, and then you're looking for the follow through, because this could be a lower high. This could be a lower high, and our price wants to go and make a new low. That could be the case. And if that is the case, I want this zone to go. So if that can break there, then the shorts become pretty straightforward. If not, if we do hold support, which is what I'm leaning towards, which is what my expectation is right now, the support level holding, then that becomes a very sensible place for a buy. And it probably drops like a 30-minute to really maximize the risk to reward, with maybe even 15. But that would be the zone and area I would keep a close eye on. EuroCHF is actually interesting, because I was debating actually placing a trade on EuroCHF literally just before the stream started. But I didn't like the 4-hour candle close, so I opted out of it. Maybe I might regret that decision, but yeah, I didn't like the 4-hour candle close. I wanted to see a bit more strength there. I might take it on the next one, but it does skew the risk reward if this does push away. So I might just chalk it off to a not missed trade, but just a trade I didn't take because of the 4-hour candle close. But yeah, I like the shorts here for EuroCHF. I do think we're quite stretched. I do think the market is in need of a pullback. We're coming into some nice zones in the higher time frames. I mean, this is kind of the last major high, which gave us this move. And now we've had a very slow corrective pullback into that area. I do think some pullbacks and some downside is pretty likely. Now, if I did take the trade, my targets would be around the 0.3 to 0.5 of this fib. So my take profit would be in this area, which lines up pretty well structure to our left. You can see a lot of resistance there as well. This would be the area I would target, because this is not really a pro trend trade. I'm not really trading with the trend or trading with momentum. I mean, you could definitely argue we are bearish long term, but at the same time, I'm looking at the kind of the moment I'm trading, the week I'm trading, and the past week we have been relatively quite bullish. So I'm going against the tide here. So I wouldn't look for any kind of mad, crazy swing back to lows. Not that we can't do that, but I'd rather wait for momentum to come in and then look for pullbacks later on when things are a bit more confirmed. So I would keep targets pretty modest just in case something like this happens, which I could see happening, really, to be honest. So I like the shorts for Euro Swiss. I was debating the entry. I said I didn't like the candle close. It was a bit too much wick action there for me. Kind of hoping now that we maybe fizzle out. Let me do that again. I'm kind of hoping that we fizzle out, push again to resistance, then give another rejection, and then I get the entry. If not, yeah, maybe I was just a bit too what's the word? A bit too picky, maybe. But again, I'm not here to take every trade. I'm only here to take the best ones I can find. And if it's not quite there, I'm more than happy to pass up on a trade, even if it does play out, which of course can be painful sometimes. Yeah, okay. Running out of time. US 500 shorts. Okay, I'll quickly go through that and then I'll pass it on to the next host. So yeah, I'm not really interested in shorts on the S&P. I mean, if I was going to entertain shorts, I would probably scale very intraday and I would look for a pullback right to the extreme, right back into this area, where I can probably get some stops above this high, because if the S&P is going to turn bullish, then this is the high that I'd want to break before I start looking to buy the market. So that is effectively the place I want to put my stop loss above, because if it can hold, well, that's an area where I expect price to turn bearish from, or at least see some downside. So I'll keep a close eye on 74.40. That would be the zone I would be interested in for a short. Depends how price gets then, how we react, of course. If I can get some stops above the high, that makes sense. Personally, I'm not interested in shorting the S&P, even if there is more downside. Like I said, with the indices, I'm mainly focused on buying opportunities. So until I see bullish structure come in, I'll be very, very patient. But anyway, guys, we have come to the end of the stream. I do appreciate each and every one of you tuning in. And if you have found the content useful, feel free to check out my channel. A lot more similar content like this over there. But thanks again to the team and Nick for having me on the stream. Hope you guys enjoy the rest of your day. And yeah, I'll be on next week. Take care. Have a good one.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good afternoon once again, everyone. Hope you guys are doing fantastic. We have Hassett here talking, giving some confidence, trying to inject some confidence in the Fed. I'm just reading here what he's saying. When asked if Warsh is a hawk or dove, he's a realist. Hassett said, I am very bullish on Fed policy going in the proper direction. So seems like he's trying to prop up that. Let's see if that's actually translating into anything, though. Oh, look at that 2-year dropping down 1.2 today. The 10 is softer today, down 0.60, but the 30 still up there. So we'll see what happens there. But yeah, seems like the day is progressing. Seems to be like somewhat of a risk-on day, I would say. You have the VIX down 10%, right back below that 200-day moving average once again. So that's really good there for risk-on. S&P up 1%. Nasdaq up 2.2. So we'll see how that continues. The Russell up. Dow Jones is up. It's a risk-on day, I would say. Let's actually look at currency strength, too, to see what's going on the currency side of things. You have Aussie or Kiwi way up there. Dollar, the biggest loser of the day, I would say. So yeah, it's pretty risk on, I would say. Geez, I think I said that like 3 times, I would say. It's funny. Okay. Trade opportunities. I kind of want to go long pound. Kind of want to, kind of don't. Kind of want to hesitate. Again, I'm looking at this level on DXY. So this is what I'm looking at right now. Very, very closely. This is going to be like my main focus. Actually, 2 main focus points. One is going to be this right here. DXY. We have broken below this bullish trend line here. The next level is this level of what could be support here. Remember, this was resistance once, twice, broke out of it, came back into this level. This is now support here once, twice, maybe 3 times, but we'll see what happens here. But I'm looking for a break of this level of 100.5. If we break this level and continue lower, you have successfully broken out of the bullish trend line and you've successfully broken out of this bullish support level. So if we get that continuation to the downside on DXY, very probable, I would say, and I will definitely hop into that. So I'm waiting for this to break here. Let me look at a lower time frame too to see if I can be somewhat more accurate. So I'm looking at this. So we could see something very soon, I would say. I'm going to make it red just so we can identify the two. But if we break this level here on a 4-hour chart like this, I'm taking this to the downside. So I'm going to actually put an alert on my chart here real quickly so I can be notified. And then the question becomes, well, what do I trade? It could honestly be dollar Swiss to the downside again. I took this position. I took a stop loss because we went above here. So I took a loser on that one. But I would be actually interested in going to, bearish dollar Swiss again. That's a contender. Pound dollar to the long side is a contender. And if I want to trade DX, oh, you know what? This looks really good. Hold on. Euro dollar was flat for a very long time, not doing anything, with the pound giving that relative strength. But really, the euro dollar has really picked up here in recent times. This one actually might be the play. 4-hour time frame. Let's see. I'm gonna need something like this to break out, which really lines up with that DXY chart. So if you get this, I'm taking euro dollar to the long side too. So this is that level of resistance that we need to overcome. It's doing quite well today relatively to the pound and relatively to the dollar. So that one actually might be my preferred one. I like euro dollar too. Like if I'm trying to trade DXY, you can't really trade DXY unless you're trading like the futures market or you're trading an ETF like UUP or whatever. So the best way to go about it, in my personal opinion, if you're wanting to trade DXY, is to go trade the Euro USD because it's basically the same chart, just inversed. DXY makes up the majority of that DXY basket, or Euro USD makes up the majority of that Euro. Geez, I can't talk. Euro USD makes up the majority of the DXY basket. And so if you want to trade that, this is the way to go about it. So I'm going to keep an eye on that too. And you're actually seeing a little bit of momentum start to pick up here. What's going on with dollar? That alert that I just set's about to get hit too. That's crazy. Anything on the news side of things, guys? You have cooler PCE today, which is certainly helpful. Remember, we had CPI lower, PPI lower. Now we have PCE lower. Nick and I talked about this earlier too. We would need to see another round of maybe missing an NFP to really send this lower. But you know what though? This looks quite good. And let me look at euro dollar too. Let's see. Euro bullish. Oh, look, US dollar is getting a bearish reading on Edge Finder. I like that. I'm gonna play the breakout. We're pretty much there to it. So what I'm gonna do, I'm gonna execute this trade on my phone with my broker, and then I'm gonna execute this thing on my alert. I just got the alert on my phone for DXY. Oh, there it is on the chart right here too. So let me execute this real quick. Euro dollar. I'm gonna go light. I'm gonna go one lot. I'm gonna sell this market. My stop loss. Where do I want my stop loss? Let me measure this move out first. Before I enter, I need to actually get my measurements here. I'm gonna target that 200-day too. That looks like a pretty solid level. 200-day could act as good resistance. I'm gonna put my stop 65 pips out. So we're gonna, what is this gonna be? Let's make this simple. 1.142. 1.142. Take profit would be, let's do 1.162. 1.162. Oops. 1.162. Okay. Bought it. Bought euro US dollar. Let me execute this too on my FTMO account. So let's go to, am I logged in? Yeah, I'm logged in. Same situation, okay? We're going to buy this thing. Stop loss at 1.142. Here, I'm just going to type it just to make it simple. 1.142. And then I'm going to do my take profit is 1.162. Then we're going to go same thing, one lot light. And we're going to buy that. Cool. So you're your dollar long. Same trade on my FTMO account to my live brokerage account. Exact same position size too and everything. So that's going to work out cool. And yeah, I like the breakout. We're having some momentum today. What's sending it though? So US 2-year yield lower. Let's see. Bro, look at that. Potential yen intervention 2 just came into the picture. Bro, what's going on? Whoa. We caught it on stream, guys. I was actually hoping for that. We caught the yen intervention on stream. So literally, as I execute a position, I should have shorted USD JPY, but I'm not going to do that. It's not wise. I shorted euro dollar. That USD weakness is going to translate into a lot of things. So this is probably going to continue higher. This euro dollar short, USD JPY, potential yen intervention. It's likely yen intervention, guys. Okay. So I'm not gonna add any positions, and let me tell you guys why I'm not gonna jump the gun here on USD JPY. For one, 160, pretty good buy the dip opportunity, I would say. So you could have a potential where if you short blindly right here, just because you see the headline of USD JPY intervention, you could very well see dip buyers step in right here and continue this higher, right? So I don't want to be in front of that freight train. Okay. I think fundamentally, you still have the carry trade, the rate differential in favor of the US. And so in that case, I would prefer to be buyer, right? So I'm not going to sit here and say that this is going to shoot up from here, but I'm going to say if USD weakness starts to come into the picture stronger, okay, I want to let it fizzle out and let it do its thing and then buy the dip. Ultimately, I want to be a buyer right here at 158. Right at 158, I want to buy that USD JPY. I think that is a pretty meaningful dip, right? I mean, obviously, if you see a candle from here to here, that is a 3.5% dip. So yeah, possible intervention. It is most definitely likely an intervention. Look at that. Potential yen intervention, USD JPY. That will definitely be a chart markup for the day. So keep an eye on that. In fact, let's do this. We're going to use this as an opportunity to do a quick plug. Telegram channel is completely free for you to join. Every single day, we drop 2 chart markups, we drop polls, we drop bonus content, prop firm discounts, all of the above. Anything to help you in your trading, you're going to find it here on the Telegram channel. So right over here, this is the one I did yesterday after the Fed meeting, right? Very, very important stuff. Lots of good things, right? So every day we do the chart markups, all that good stuff. Free courses right here, everything you'll need, right? Bonus content from Nick as well. So today, after this segment here, I'm going to get to reading and see what this really is about. It won't be confirmed until the next day. So like the actual confirmation of an intervention comes on the next business day. So we will probably see a confirmation on Friday, but nonetheless, this is a meaningful move here that you guys definitely need to be mindful and aware about. So in that case, I will definitely make a chart markup for today. But yeah, it seems like we are seeing a lot of weakness here in USD JPY. And that is so crazy how I literally executed the trade for euro dollar long right when that happened. Okay, let's see what's going on here across the world. Gold is picking up as well. Gold position up a little bit. Euro dollar position up a little bit. So green day today personally, but we'll see how this continues. This is actually showing a lot of follow through too. Like this is showing some follow through. This might be a bigger candle than this one. So this intervention candle was, let's look at the range of this intervention candle, was about 500 pips. This one is at 300. So we'll see if it continues. This was most definitely an intervention, guys. This is not there was no US fundamentals this morning that was that dramatic, that impactful to send USD JPY lower. And think about it, only USD JPY is moving like this, right? Like the other ones are moving, sure, but USD JPY is leading the curve. In fact, let's look at this. Look at that currency strength index. JPY was right here. It is now way above here. So very, very cool to see. My friend Marco here, the intervention guy, he's coming on to join me. I would love to get his thoughts so we can look at this and experience this beautiful moment together. Marco, if you're in there, come on through, man. Crazy stuff we're seeing.
Wait, I'm here.
You're
Just
here,
a second.
There. Yeah.
Let me set things up to hosts. Okay. Yep. Awesome. Yeah, intervention. I got smacked around yesterday with Mr. Kevin, but today is a better day, I guess.
Today's a better day.
Yeah.
See, man, that's the thing about trading, man. You just gotta live to fight another day. You know what I mean? You gotta survive. Very interesting. So, Marco, I was literally placing a dollar long position on my phone as this happened, and then I look at the chat, and everyone's like, "Look at that, look at that," and then I go to Financial Juice. I'm like, "What am I looking for?" And yeah, possible yen intervention. So it's a big candle, and it seems to have some kind of follow through today as well. So that makes me happy.
Yeah, it's a big one, and to be honest, I was betting more that they make a surprise rate hike to smack it even more. So essentially, looks like the dollar is selling off on everything. Is that correct?
Dude, look at this level of support too. Like this. Okay, so
DXY is getting smacked.
I was talking this morning, man. Like we have this upward trend line here on DXY, right? It's been holding up. We peaked below it here, very shy on what day was this? I don't know what day, but this day. But yesterday we really actually peaked below it and closed below it too. Today you're having a continuation of that. But the next kind of hurdle that we need to overcome on DXY is this 100.5. Like this 100.5 was a resistance. It capped advances many times, okay? And then we had this breakout. Then whenever we would test into this level, it was support. So now you have an opportunity to see a real actually break below this level. And if you do, then at that point, I kind of see DXY personally kind of tag 99 to 99.5 where the 200-day moving average is. So that's kind of my thought process. Like if we see a continuation there, definitely DXY lower. And if that happens, Marco, then what that kind of translates to me is 99.15 here on DXY. Looks a lot like 158 on UJ. So that's where I'm potentially looking to buy the dip. But what about you, man? Like what are you seeing here? Are you looking to like actually get into this on the short side? Or what's your thought? Are you still in Swiss yen too? I'm sure that's working out quite well.
It's doing well. It's doing well. It did get smacked around a bit yesterday, but now it's looking a lot better. So that's definitely positive. Although this is more of a long-term position.
Okay.
So I'm essentially betting that this could be the start of a bigger downtrend, or at least a bigger correction, because the Japanese government really wants to push the yen up, and they have like 3 tools at their disposal. First tool is an intervention, which happened just now. Second tool is a surprise rate hike, which could happen tomorrow or tonight for you guys in the US. And the third tool is the GPIF. So not TGIF, but GPIF. Those are the pension funds in Japan, which got an order from the Japanese government to start selling foreign and buying domestic assets. So I'm betting on at least one of those 3 to happen. The first one looks like has happened. Now the question is, what is the follow through? Is it just going to print a massive wick? So I'm gonna have to look into maybe taking some profit out of this. Yeah, not really sure what to do here or to let it run. I'm gonna have to think about it some more. Well, I think I have at least 1 day to think about it. So I think if this is a confirmed intervention, looking at the past ones, they usually don't tend to fill the, let's say, produce a huge wick to the downside. So usually the most of the move stays there at least until the next daily candle.
Sure. I mean, even just looking at this one, like this intervention here, which this one seems to be of similar caliber. You had the intervention and price kind of stayed within here. It even got even lower too at one point. So it's okay to be patient. And I would say, and not financial advice to everyone, but I would say that it's a wise choice to kind of be on standby and see if this really does have some follow through. Because Marco, 160 is a pretty solid level too. Like if I'm looking at this, resistance here, like everyone was like 160 is a level that's going to be defended. Then you had a breakout, and then you had this dip here where it turned into support. So now this level here could very well be support if you have dip buyers. But in the event that you do see some follow through, then you want to be patient, stay away, and let this thing roll over even more. So
absolutely. In trading, what I noticed, you get a couple of home runs per year, maybe 2, 3, maybe 4 if you're lucky. And the difference between the home runs and the regular trades is you stick through the temptation to take profit. So like you're sacrificing potential 2, 3R for a possible 5R, 7R, 8R, 10R trades. So yeah, that's kind of what makes the profitable traders so profitable, is they can let those winners run. And for me, it's a struggle, like watching the trade be in profit for a long time and not taking anything off. But yeah, that's why trading is tough.
I've said this, Marco, but like my ideal like home run trade of the year would be like this, right? Like had I bought this dip here, and I was in Croatia in this time, had I bought this dip here, bought UJ, caught the appreciation, plus caught the positive swap, like that would have been a really big runner here. And then like just building positions along the way as you get like key structure. I think that the patient trade, like you just said, like highlighted, if you are just patient and you just wait for it to happen, yes, you may give up a little bit of R potential, but in the grand scheme of things, you can gain a big one. I think that if you were to get UJ back to 158 here, you could have another version of this where you get the appreciation, and then you also get the positive swap. Now, does it continue all the way to 164 again? Possibly not, because at that point you have to ask yourself, is BOJ hiking rates? Is the Fed neutral? The GBIF that you're talking about as well, is that in play? So like if the underlying structure starts to shift a little bit, but that could be one where I can catch some appreciation and positive swap to at least like one here, 160 again, right? And then if we break and continue higher, then I would trail stops and then continue, and then trail stops, and then similar to kind of like this overall trend here. So that's kind of what I'm looking for as far as like a big trade for me that I've been looking at. JXY, let me pull that up here. Yeah, same thing, right? So I've said JXY, if we get to this level, this is the trade where I would pretty much go long or go short the yen basket. So pound yen, CAD yen, Aussie yen, Kiwi yen, dollar yen, I would pretty much go long here and basically build a position on the yen while also taking advantage of the very attractive positive swaps.
So you would be patient up until we reach that level, let's say.
I think there's a possibility, man, especially if there's some continuation to it. I mean, you also have to the fundamentals in line for dollar weakness, right? So you had PCE this morning cooler. If we reflect on PPI, this recent one was cooler. CPI was cooler. NFP was softer as well. So we do have NFP coming up, or I think ADP non-farm payrolls coming up next week. And then we have NFP shortly after there as well. So if you do have that continuation of like US fundamentals pointing in the direction for USD JPY to the downside, I think that we can very well reach JXY to like 64, this level here, where I can get a good risk defined opportunity and take this to the downside once again.
Yeah, I'm with you. I think further yen appreciation is the way to go, and with all of the things that I've listed, and also if you do a little bit of research into the politics in Japan, Takaishi, which is basically the Japanese Trump, so her government is losing votes, essentially losing popularity, losing the polls. And that's definitely not good. One of the reasons is the weak yen. So the purchasing power of the businesses and the citizens in Japan is going down and down and down. So they're looking at the government and saying, why aren't you intervening or doing anything to counter that? And to bring back some votes, they may be even more inclined to try and push the yen to the upside. So that's we have that going for us as well. Could be a bit of a longer trade right there. Yeah.
Yeah, man, this thing is getting smacked. It's about to hit 2%. It'll likely hit 2% today. And I'm very closely watching that 160 level. This would be like, if there are any buyers in this market, the immediate buy would be at 160. And if you fail that, then 158 becomes a very high probability.
Yep. I'm seeing my dollar positions are not doing so well. My USD CAD. But it makes sense. It makes sense that the dollar kind of loses value. Maybe they kind of jumped onto the dollar weakness after the Fed. So maybe they got together and said, "Look, this Fed meeting was really bearish for the dollar. It was a pretty dovish event. Let's go ahead and smack it even more now." Like a couple of hours later, and it's the exact tactic that they have used in the past. So I wouldn't be surprised.
Yeah, I mean, on a relative basis, USD CAD isn't doing too shabby. It's only down
Yeah, it's not
0.17
that bad.
versus the other ones. Like you got Kiwi dollar up there too. 1.23%. So it's not the worst case scenario, but I do think that this can start to trickle into like broader USD weakness. Let's look at DXY real quick, and it's breaking that level, Marco, as we're speaking here. So
Yep. I'm gonna have to check my FTMO, see if I'm anywhere close to the target. So give me 1 second.
sure.
No, not really close to the target. Let me just look at this.
Gold is up today as well.
I still have 1K more, and then I'm gonna be at the target for the phase one. So
Nice.
yeah, that's good. It's good.
Congrats, man. And look at the Nasdaq here too, up 3%. It's definitely tilting more risk on today.
Oh, damn! The Nasdaq is flying up. Woo!
3.3%. Yeah.
I did buy it yesterday after the event got taken out.
Dude.
Got taken out just before the push up. It's pretty weird. Why are we going so much risk on? It's pretty strange to see.
I think it's just broader dollar selling. You do have the
possibly.
2-year here softer as well today. This is another level, another chart that I'm very cautiously looking at too. US2, which tracks the Fed policy. I would like to see it break. We did break here, but we didn't have any follow through to that. So if you do break this one and you do see some continuation to the downside in US2, that's definitely going to be dovishness there.
Yep.
Alan Perez, do you listen to Lil Baby? Of course, bro. Who does not listen to Lil Baby? Look at 30. Yeah, 30's up there. Marco, do you listen to Lil Baby?
Yeah, absolutely. I got a funny comment on my Instagram because with every one of my story on Instagram, I put like this, I don't know, I put a rap song behind it.
Sure.
So like Lil Baby, Drake, Travis Scott, and all of the basically rappers. So I got a comment saying your content is great, but your music is shit. It's like some
subjective,
boomer on Instagram.
Man.
Yeah, it's a boomer on Instagram. That's like 50 years old, and of course he's not gonna like Lil Baby, but he's just gonna have to deal with it or mute the sound. So yeah, Lil Baby's gonna continue on my Instagram account.
There you go. You should do Lil Baby for the whole next week. That's what I would say.
Yeah, absolutely. I switched it to Gucci Mane. I think he may like Gucci a bit better. That's a bit more old school. So we'll see.
Yeah. You got to switch it up a little bit. This guy says, where do you put the take profit on euro US dollar? Do you think it's the inverse of JPY? It's not the inverse of dollar yen. It's going to be more of the inverse of DXY. So when I'm trading euro US dollar, I'm essentially looking at this through the lens of DXY. And as far as my levels go, this is my levels here. And so this is kind of what I'm looking at here for targets for euro dollar. I'm targeting this 200-day moving average. It's also very close to this level of, I don't know why this is green, this should be red, but this level of resistance. So that's where I'm going to kind of keep that there. And then as far as my risk goes, I do have this breakout here that I wanted to see on the 4-hour, which we are seeing today. So if we were to see a pullback into this level and continue and hold higher, then I would just trail my stop here, likely to break even, and then let this thing continue to run. But again, this is very still early in the trade, so I need to let this thing breathe, let it do its thing. But my take profit is going to be 1.162, and my current stop loss is 1.142. So very simple trade.
Are you in?
Yeah, I just took it. I took it
Awesome.
on my live
Awesome.
account and on my FTM account as well. Like,
Oh,
literally
okay,
as the
amazing.
intervention was happening. So this is
Cool,
it right here.
cool,
So 1.142 and 1.162.
That was a good play, jumping into that. But
It was a lucky one. I had no idea, man. The chat was telling me, like, I was like looking down at my phone, and the chat was telling me, like, dude, look at this, look at this.
So you didn't put it on after you read about the intervention. You put it on right before it.
Yeah, right before.
Okay, cool. Well, nonetheless, a good trade, and it's all about the Fed. That's what I wanted to talk to you about. So the Fed looks like we're getting a dovish Fed. I watched the meeting yesterday, watched the rate decision. Basically, the rate decision was a hold, but the meeting, I would say, was dovish. Much more dovish than I personally expected. Like, anytime they asked him, inflation is elevated, why don't you hike now? Why don't you hike at the next meeting? He tried to tiptoe around the problem and just dodge the question completely. And then he mentioned that the last inflation print came in lower than expected, and that's a good sign, which means he's cherry picking the inflation prints because that print was lower because the trade was open and oil was down. Now the trade is closed, oil is massively up. So yeah, I think just we're getting another dovish Fed. We're getting another Fed that waits for 6% or 7% inflation to finally hike rates.
I think my takeaway was like, I think Warsh was trying to be hawkish. Like, I think that's what his intention was, but he didn't come off that way. Like, I think the market took it as dovish. So this is what I was seeing yesterday, Marco. The spread between the US2 and the US30. I meant to show you this. I can't believe this slipped my mind. So this is I'm gonna make this bigger here. This white line, excuse me. This white line is the Fed meeting.
Okay.
As the Fed meeting progressed, you had the 2-year yield lower, which the 2-year is the 2-year average of the overnight financing rates. That's the one that tracks like the Fed policy and stuff like that.
Yep.
The 2-year was lower, but then the longer end of the curve was higher, and so there was a spread happening. And if you look at, like, usually they're in line, like this one's in line, like lower, right? Higher, lower, higher. You get the point. So like, and you know this, right? They usually fall in line, but they had a divergence yesterday. And so I think what was happening was that the market was pricing in or seeing a dovish wash, but then you also had like a kind of a put placed on the Fed, where the difference between the short end and the long end is like the short end is tracking the interest rates, and then the long end is just tracking like essentially confidence, like risk. How much risk does one want to take on for holding US debt? And so if you're going to commit to holding US debt for 30 years and you don't have so much faith in the Fed or in the government or whatever, then you would demand a higher yield. And so that's what I think was happening is you had like some kind of a mixed bag. And that's why, like, yesterday, for a brief moment of time, you had like everything kind of sell off. You had dollar lower, but then you also had stocks way lower too. So that's kind of what I saw there. And then to the point of now, I think the outcome is more net dovish as the things progress, because the yield curve started to get back in line with each other. So that kind of stabilized for a little bit. But you did have a little flash of like dovishness / pricing in a little bit of unconfidence in the Fed.
Yeah, I would say so. And to be honest, first meeting from Warsh was hawkish, right? And he had a pretty clear stance about inflation, about lowering it, about it being above target for 5+ years. But he kind of switched. he kind of switched up on this second one. Was very hesitant to talk anything hawkish and was just trying to stay neutral, which was interpreted as being dovish at the end of the day.
Yeah, like Nick said earlier, he was like, at one point in the meeting, he was like, yeah, like we're going based off of the market, and the market is very efficient at pricing everything, and et cetera, et cetera. And he was giving all the glory to the market. But then the reporter followed with that and said, or another reporter followed up and said, like, about the market, like they're pricing in tightening, because leading up into the Fed meeting, you had yields together on the rise, the short and the long end. So they were pricing in that restrictiveness. And then War says, well, the borrow market is not that smart after all. So it was like, it's a little bit of hesitation on both sides, which was interesting. And so that's why I think that uncertainty was getting priced in on the long end of the curve with the 30 yield higher.
Yeah. And we need to know, if you study the Fed, they are super happy to cut. They cut like this, but for hikes, they're super hesitant because, to be honest, like rich people hate hikes. And those guys that run the Fed, they have a lot of rich friends. So I don't think that the hiking rates is the most popular thing. And that's why it's kind of the last resort. And that's why they are usually late to the party. And you have to go to extremes like 6, 7, 8% CPI to get them to hike. So for me, like I'm still bullish on the dollar for the next CPI print, but I'll probably look to get out before the Fed meeting because I think we get another dovish Fed. Even though inflation could run above 4%, I still think we get a dovish Fed, even in September.
Well, this dovish Fed would really propel this thing lower. I mean, look at DXY, man. As we're seeing this, like this could be, I mean, not this could be. This looks to be the dollar long trade unwinding, as before our eyes on the A1 Trading live stream on the July 30th. It's happening here. I mean, DXY, that level fell right through. UJ is adding to that. I mean, it's getting way closer to that level than I thought. We might get there by the end of today, man. I don't know. I don't know if I buy the dip. I would rather, at this point, as I'm saying it, like my execution is changing here, because if you do hit 158 rather fast, I really need to see what happens here with this 200. Like if this 200 holds like sand and we see this, then maybe my next value zone will be 155. But we have to see. But this is a very, very crazy day, and I would imagine a bloody day for a lot of people if they're not sized appropriately.
Usually interventions go to 3 to 4%, the big ones. So if you study interventions, 3 to 4% is the norm. We're now at what, 2.68. This one was a smaller one, but if you go to like 2024 and some years before that, it's usually 3 to 4%. Well, this one is approaching 3%. So maybe I should take some off.
Yeah. We'll see, man. But it's really starting to send some follow through. Marco, I'll leave you to it, man, for your solo segment. One thing I will say, I said this earlier, but I'm going to say it once more here before I pivot out, guys. Markets are moving very, very fast, and I would love for you guys to be well informed as much as possible, not only on the technical side of things, but the fundamental side of things as well. So I'm going to drop this Telegram invite one more time. It is completely free for you to join, no strings attached or anything like that. Join it, give us a shot, and if you love it, stick around. But Marco, thank you for the awesome conversation, man, and I wish you the best.
Thank you, Alan, as well. Looking forward to Monday, and let's see what happens. Good luck with the EU.
All right, man. Take it easy. Bye-bye.
Yep. See you. Goodbye. So let's continue with, let me just share my charts, which I forgot to do. Okay. So this is what I have. Essentially, I have Swiss yen. If you are in the A1 Discord, you would have been notified about this trade idea. So this was called out in the A1 Trading Discord. You can join the A1 Trading Discord and you can get a big discount because we're running a massive summer sale. So you can get, I think it's 45% off with the code Marco. It works both on the Discord and for the Edge Finder. The links are in the description of the stream. And this is, as I mentioned, the big summer sale. the summer sale lasts for today and I believe for tomorrow, because tomorrow is July 31st. Yeah, I think it's active for tomorrow as well. I just want to say, if you're looking to get the Edge Finder, this is the best time to do so, because this is the biggest discount of the year. If you don't believe me about the Edge Finder being a game changer in terms of software and in terms of what it did for my personal trading, well, check out the reviews. A1 Trading Trustpilot. Whatever you do, especially in the trading niche, whatever you're looking to pay or buy, always go to the Trustpilot. Look at the reviews. So A1 Trading, 4.8 out of 5, 242 reviews. I would say that's amazing, okay, in this niche. And then see all reviews, read through them, and take a look what's up. You know, all of these are 5-star reviews. So people like the Edge Finder, people like the Discord. You can get 45% off with the code Marco, both on the Edge Finder and the A1 Discord. So yeah, do think about joining us. Let me just see, how many viewers do we have? I can't see it right now. Okay, we have okay views. Yeah, looks good. I am seeing a bit of, let's say, lower activity in the markets because it is summer and we're getting summer trading. Let's see, UJ. My USD CAD, yeah, my USD CAD is probably going to hit the stop loss, unfortunately, but it is what it is. UJ, I told you interventions are usually 3 to 4%. We're now at 2.66. We could go to 3%. Where would 3% be? Let's try and see. A bit lower, a bit lower. We're definitely below 160 now. That's good. The previous ones, this one actually had some follow through, but that wasn't an intervention. It was just a rate check. This one did not really have follow through. In July of 2024, there were a couple of big ones, if I remember correctly. Yeah, basically here. Okay, during this waterfall, you had a couple of interventions, and this was a pretty big move. So if you look at all of those, and if you look at the previous ones, 3% is the norm when it comes to these interventions. Let's see it on the 5-minute. Yeah, it's just a straight waterfall to the downside. That's what it seems. Interesting. Very, very interesting. And I'm keeping an eye on my FTMO account, which is really close to the target. Really close to the target for the phase 1. So let me just set an alert. If this goes down a little bit more, I'll be able to pull the trigger, close the trades, and hopefully pass phase 1. Those are my only 2 trades that I have. So USD CAD and Swiss Yen. We had that meeting yesterday. I did try and take a long setup on the Nasdaq. It didn't work. I got stopped out. So right after the meeting, I said, let me flip to risk on. Let me try on a risk on position. Took a long and unfortunately got stopped out by a couple of points. Would have been a good trade if I didn't get stopped out, but that's trading. You can never time things perfectly. So that was my trade on the NAS. I did also take a small stab on TLT, which I did manage to get out in time. So it was very small risk, just an experimental position. Basically bought TLT before the meeting, thought it was going to be a hawkish meeting. And then it was not. It was a dovish one, so closed it for, I think, half of this. A very small loss in the end. So managed to pull through that. Let me see what else we have. Gold going up a little bit today. Corn or Bitcoin up. Brent not doing much. The strait is still closed. I wouldn't be surprised if oil goes to 100. And my personal game plan when it comes to USD CAD. Okay, now I'm above the equity, but if I close it now, the commissions will basically screw me over on FTMO. So I'm above 110K, which means I passed phase one, but I still need to wait a bit, because if you close positions right around the profit target on prop firms, they add swaps, or not swaps, they add commission, they add spreads, and then you basically don't pass the phase one, okay? Let's see. Let me bring up UJ here. Going down more. Okay, that's fine. Still keeping an eye on my FTMO. Okay, it's very volatile. Yeah, this is tricky. This is tricky to close. Tricky to close. It's hovering right around 110K. Yeah. Anyway, I also want to mention, before I forget, Ola Prime is 20% off with the code A1 Live. So A1 Live gets you 20% off. Do check out Ola Prime on their Trustpilot. Read the reviews. 5-star, 4-star, 3-star, 1-star, 2-star. Read everything. Do your research. We have got a couple of traders in the A1 Discord who have gotten steady payouts with Ola Prime. So code A1 Live is 20% off. I'm going to try and close the trades on my FTMO now and pass the phase one. I wish you guys good luck in the markets. You can catch me next week. I'll be streaming pretty much every single day. And let's hope the yen just keeps on sliding. For my Swiss yen, if you're in the A1 Discord, I'm holding it for now. I'm just going to close it on my prop firm accounts if I'm close to the target. So yeah, that's it. Thank you. See you. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
Hey, there's a video and a volume button I forgot to punch. What's going on, everybody? I made it here by the skin of my teeth. Had to squeeze out of a meeting. Hope you guys are doing well out there. As always, let me know. Wow, I'm too close. There, it's a little better. You guys don't need to see the pores of my skin, right? Hope you're doing well. Let me know, guys, what tickers you're looking at. As always, yeah, definitely keep that A1 Live code in mind if you are looking for an account, a new prop account with Ola Prime. Pretty good stuff over there. So as always, just let me know if you guys have any questions on that at Trade Like a Tiger over on all the socials. I'm mainly on X over there, by the way. I have an account for all my socials over there, but X is primarily the one I look at the most. So, but feel free, guys, drop me a message over there for any of them if you have any questions on that stuff. But anyway, we have made it to the last show of the day. Obviously, we did have the GDP PCE numbers come out light today. So let me see. Did we get an update since the last time I looked over here? I just wanted to go and double check, see what our percentages. I think the percentages is dropping to the 30s, if I'm correct. Yeah, 30%, right on the dot. Okay, so down to 30%. So the Aussie is out of the basement. The dollar is down there all by its lonesome. again, guys, for the month of July, just to recap, this thing went from 100% beat rate now all the way down to 30. So it's lost 70% when we're just isolating the higher impact economic calendar events. So data-wise, not looking the greatest, but obviously geopolitics is keeping that thing propped up when it comes to the dollar. So when those reports came out earlier, and by the way, remember the PCE release there, it's kind of preluded a little bit when it comes to the CPI and the PPI that we also had a cooler rating on earlier in the month, I think a couple of weeks ago. So again, it's not 100% that works every time. PCE does typically come after those other two events, those other two reports, but more often than not, if those first two are cooler, the PCE will often come out cooler as well. So again, it's not 100% certainty, but for the most part, it's enough of a trend to where you can kind of semi-rely on that. So yeah, I kind of perceived that was probably going to be the case. And so yeah, cooler rating there, cooler GDP as well. That's the advanced rating. When those reports did come out, guys, it's as clear as day what the dollar did. Okay, we got a dollar decline. It didn't necessarily happen immediately. This is a 5-minute chart. So the top four, that's where your dollar is the second currency in quote, the quote currency itself. Obviously, those pairs appreciated relative to the dollar, and the bottom left three are your dollar CAD, dollar Swiss, dollar yen, where the dollar is the base, and then the Dixie on the bottom far right. So that's as trendy as it gets for all the currency pairs right there. Dollar weakness so far. So we didn't really get a big change right from the jump. It did kind of take a little bit of time, and then finally here, whenever the U.S. markets opened up, the cash market, that's where we saw the dollar continue its descent. So dollar weakness at the moment. Obviously, we just went through the data, but the geopolitics, for the most part, still keeping this propped up. So I'm looking at the Aussie pair, the dollar-based pairs right now, and the one that I was watching the most, just because it was the one that was nearest one of the zones I was interested in, was the Aussie dollar. So we had dropped into the daily zone over here on the right, and then over here on the left, if I go to my 4-hour, we did have a 4-hour demand all the way at the bottom. So that would be the main confluence point I was watching. We had another minor zone a little higher up the top part of the daily, 2-hour, 1 hour, I think it was. I wasn't too excited about that one because I was personally waiting for the zone that was created closest to the origin of this move up that we had here. So price did come down there, chewed through this zone, and it got all the way down here, guys. That was my point of interest. And of course, wouldn't you know it, it missed by 2 pipettes. So 1/5 of a pip. That was the exact point I was waiting on. And I've told you guys before, but this is a lot of times when I miss out on trades. That's usually what happens. It usually gets right to my zone, and then it does an about face before I have a chance to get into it. Everything else about the trade looked pretty decent. The daily EMAs started to point back to the upside, obviously aided by yesterday's rate release, because again, the dollar lost value yesterday quite substantially. Yeah, just straight up missed it. Now, if I wanted to get really picky on this Aussie dollar trade opportunity, what I could have done was went all the way down to a 3-minute time frame. And yes, I missed the demand itself, but we did obviously get that spike up. It kind of broke some of these major structures up here. And then on the retrace, okay, talking about confirmation entries, you guys hear me throw that word around from time to time. Yes, all the way down on a 3-minute time frame, it actually did give me a 3-minute demand right here. Okay. Well, not me. I don't own it, but it gave us. It gave the market a 3-minute demand. And then it dropped into that point, the 3-minute candle there. Obviously, we had a lot of volume that took place clearly around the rate decision, the rate release, the rate statement, all that. And then from there, we pretty well got a push up. Okay. So that's, again, very, very noisy territory, but it just goes to show you that zones can work out pretty decent on all time frames. But I just personally stick with the higher time frames, and I just did not get that bounce down to the 4-hour confluence like I was looking at. And then wouldn't you know it, the dollar weakness continues. Today added to it, and then price ran away without me. So there you go. There's another one. What we got over here, guys? Dollar CAD says digital content. Yeah, let's do that. Yeah, obviously it's getting a decline. I think pretty well, if I'm not mistaken. Let me refresh my chart over here. I think that was still pretty well neutral last time I checked. So I don't know if it would have went bearish at all because of the data that came in. It did. Okay, it did. So we're down to -4. So -4, dollar CAD and dollar Swiss as well. So let's just go through the majors, because at this point we have the pound dollar, the euro dollar, Aussie dollar have taken away those yen pairs, and now they're at the very top. Kiwi dollar. Yeah, let's just go ahead and look through all the majors. How about that? Which is why this is a cool chart to look at immediately, because we already know that the dollar is going down on all the pairs. So let's go start isolating some of these majors over here and see what we got, ladies and gents. So let's go ahead and start with dollar CAD, since that's the one you brought up there. Obviously, it's given a new bearish look. Okay, so we are currently fighting a demand. Now, this demand was already mitigated. Okay, so remember, when it comes to demand zones and supply zones, it's not like a support resistance line. Okay, people often say that support and resistance gets stronger each time it hits, but when it comes to zones and looking for unfilled orders, it does the opposite. So since we've already bounced in, that's sucked away some of these the unfilled order potential that we had in the zone itself. And clearly we got to push away on dollar CAD. And what did it do? It bounced into the overhead daily supply. And then there was a confluence point there as well, and it actually bounced into it as well. If we look over here on the left, I think that was either a 2 or a 1 hour. It was a 2 hour. Okay. So 2 hour right here inside of the daily, and that's exactly what we bounced into. Right here. Right there. Just barely wicked in. It's kind of hard to see, but we just barely wicked in. So that's that confluence point. So that confluence point pushes price back down. Remember, price bounces all day long between supply and demand on all the time frames. Just the higher we go, the higher time frame, the more accurate it becomes, because we're dealing with more and more smart money. Smart money is what creates those. Okay. So now we've bounced down to the day. Okay, now we're getting a bearish signal on the edge finder. So for me, just like I drew up back here in the past, I just basically want to see, and I'll just color that yellow so it can be a little easier to see. Just like a lot of these pairs, guys, I want to see a break and close below the remnants of this demand. Yes, it is mitigated. Yes, it has had orders taken away, but it didn't even make it to the 50% range of that. So as long as it stays 50% or less, then there's still a possibility of having some orders on the other half of that could push price back up. So that's why me personally, I require, if I'm to get into this short, it's at least got to break and close below this structure first. Okay. If it does that, and now I'll just kind of update this for current price. If it does that, breaks and closes, then I'm going to be looking for a retracement to a supply. Now, with this one already being mitigated, with the 4 hour and the daily being mitigated, I don't know that I want to really trust that area, because again, it's been touched. It's the same thing rings true up here. Orders have been sucked out of this range, out of this zone. So do I have another zone I can potentially look to short? Well, we obviously had the descent yesterday. Okay, and this was 2 hours, so I need to go to a 1 hour. We had the descent, obviously, from the rate release, as well as the rate statement come out. So maybe a retracement back to that point. Do we have a decent looking zone here? I mean, by definition, we do have a zone right here. Okay, supply. Now, is there a lot of candles preceding it? Well, we got 1, 2, 3, 4, 5. It's a lot of candles. It's a little questionable. But what I like about this, if I just go to a full screen view for you, what I like about this zone is the fact that it has the benefit of knowing that we just bounced off of a supply zone higher up. So this kind of acts as the slingshot down. And again, if we get that break and close, then I would be interested in taking a look at this supply zone right here. Okay. So that would be a potential spot for me, but if and only if we break and close. So I'm not even going to worry about putting an alert up there yet, not until I get this piece of price action do its thing. I want to see this supply have strength to push down. the leg out volume on that rate statement slash release, there was clearly a lot of activity, a lot of liquidity, a lot of volume, a lot of trading activity that happened. So that's the focal point for me. This one down here, it's just not as much VSA activity, not as much volume. Okay. And it's too premature to even draw anything up in that area anyway, probably. But we could drop down to a 2 hour, and now we have a 2 hour supply. So we'll keep an eye on that as well. I guess at this point, the leg out volume is quite strong. Nah, I tell you what, I'm not even going to draw it up yet. If we get the break and close, I'll draw this up as a possible supply as well. Less risk on this one. So smaller risk, maybe a little more risk, a little higher up where it's more expensive and it's closer to the origin of this move down. So that there's a couple opportunities. It's too early to draw this zone up yet. So yeah, as it stands, if we break and close below that structure, retrace to 140.75 area, might be a possibility. And oh, by the way, talking about master patterns and contractions, expansions, and trends, we do have a contraction box over here. And quite often that 50% midline can act as its own dynamic support and resistance. It's going right through. This is a 2 hour, but the same would probably ring true on a 1 hour. Yep, 1 hour. Yeah, so it looks like 2 and 1 hour. 1 hour is the most important for me. But that acts as its own dynamic support resistance, and it's going right through that supply zone. So I like that, guys. But I don't like it if it just comes straight up now. I only like it if we get the break and close. So that's just a thought for me, okay? Just to kind of sum it up, let's break that downward structure first. Hopefully that helps you, Digital. Good analysis. Yeah, you're welcome. You are absolutely welcome. Dixie is on a one ticket straight down. For now. For now it is. Okay. But that report was what, 2 hours ago at this point? So let's just go to something simple like a dollar yen. Okay. Look at that. Big. You see how we still have a ton of volume in the markets right now? It's still quite volatile. Now, you guys hear me say I like to have big, strong VSA candles down here when it comes to leaving my zones, the leg out. That's obviously what I want to see. But for me, whenever we have a red folder event that's just going haywire with price, I like to see it actually come back down to green candles, at least temporarily, just to show that it's kind of slowing down to where it's it's not so crazy volatile at that point. We love volatility, but we don't like it when we're trying to enter a trade, because that usually means a big event is happening, a geopolitical event, or obviously a red folder event. So I would personally, on a 1 hour chart, want to see the volume come back down relatively to normal, and then look for price to bounce into one of my zones after. And then I do want to see this candle. So it's a little bit of a juggling act, okay? But volume tells us everything. It really does. It tells you when to stay the hell out of a trade. It tells you when you can look to get into a trade. So anyway, let's see. Let's go back. I'll just go from the top for the rest of these majors real quick here. Starting at the top. So we just went through Aussie dollar, Euro dollar, pound dollar, Kiwi dollar. These are all on the list. Again, the dollar quote currencies are the first four on purpose, guys, at the top of my list. And then the dollar base currencies, pairs are just below it. So just finishing out the dollar quote currencies here, getting a bullish reading. So the common theme here is sell the dollar, right? That's the common theme as far as the data is telling us. Okay, the fundamentals, the sentiment combination. Now we just got to go find a way to time it. So, and this is what I've been saying in a while. Okay, a lot of these moving averages are still pointing down. We still have, lower lows, lower highs. Now this is a good sign. This is a good sign that we've broken through this equilibrium box I kind of drew up for you guys a while back, and it's also good that we're breaking through or currently chewing through this 4 hour zone. I believe it was that a 4 hour? Yeah. Okay. We're currently in this 4 hour supply. I want to see a close above this, and then maybe we can look at a retracement for a buy, because at this point, what do we have down here? Just like gold. Do we not have a higher low on the daily? Great. Now we've got a higher high. But me, I'm just being a little extra picky. I would love personally to see it close. At least just even if it's just a pip or two above that zone. Because now that would be showing me this. It'd be showing me I'm breaking one structure. Also the equilibrium. But now I'm also breaking a second structure to the upside. So I think I pushed that too high. Let's just keep it down here. So this is currently what I kind of want to see, guys. I'll just go to a full chart, make it simpler to see. Okay. So this is what I want to see now. Now that I know I have a higher low, I want to see a close for the higher high. And a 4-hour chart would probably be okay with that. See, we've broken this structure, this bottom one, but we still technically don't have a closed candle yet. This 4-hour candle has another 2.5 hours before it closes. We'll probably get away with it on a 1-hour chart, which even on a 1-hour, we don't have a close. But I just want to see it on a 4-hour. I want to see it on a 4-hour because we're still trying to come out of that downtrend. So again, that's just me being extra careful, very careful. But we could probably get away with a 1-hour close, which, by the way, that'll be in about 25 minutes. So at absolute minimum, there's nothing I would want to do for another hour, half hour. But I still need to see a retracement. If we get the close, then what have we got right here? Got a 4-hour demand for a possible retracement. And I drew this up, this yellow line, before I knew this even existed. So now all I got to do is just do this. Let's get a retracement. Close up here, retrace to demand for a possible long. Down a little lower is the retracement of Wednesday morning. Yesterday morning. We have another zone. Yeah, it's another zone down here. This is closer to the origin of the strong move up, right? There's a lot of space in here, though. If this zone were down here, like a zone on top of a zone, it'd be one thing. You know, you could look at, well, there's obviously the whole idea of DCA and in, maybe get into a smaller position on the first zone, finish the higher part of it at the bottom, whatever the case is. But this one's a little higher up, and it's right at the 50% fib retracement at the moment. I mean, if price were to just base where it's at, a close, I should say, where it's at. Yeah, look at that, 50%, right in the middle of that zone. So I would probably be happy taking a small position right here. Okay, small position here, maybe a little better of a position if it chews through that. Gives a small loss to start with. Come down here and make my money back if it chews through that. But it all hinges on the bounce, guys. For me, am I getting a confirmation entry? Am I getting a bullish engulfing candle? A candle where it closes at the top of the range with a wick underneath. Obviously, my volume starting to pick up. That's all things I'm looking at after price hits the zone. So I do like euro dollar if it closes. Pound dollar, yeah, let's see here. Pound dollar is, it came down and got close to that zone I've been talking about for about 2.5, 3 weeks, that 132.50 area. Bottom third of the curve. Came down, got close, but then it reversed. So at this point, what it's done is it's the very same thing that the euro dollar's done. It's broken structure to the upside, showing a change of character, a higher low, I should say a higher high on the day on the 4-hour here. Now, if we get a retracement down to this area, I think there's going to be some stop losses hanging out here. Imagine all the buyers of pound dollar when the rate statement came out yesterday. Well, where are they going to put their stop losses? Most likely down in this area somewhere, right? Give or take the size of this. But the point is it's right there at the demand zone. So I like that. I like that there's liquidity hanging out here along with unfilled order potential. So Andrew, if you're out there, there's your pound dollar again. So yeah, just need a little work. Just need to see a little work on that. Moving over to Kiwi dollar, same thing. Got some liquidity pockets, I think, down here. Triple bottom. Everybody that's did have the power to at least push price up, putting their stop losses down here. Same thing right here. Push stop losses. And now ultimately this move that we've gotten since yesterday's rate statement has just been going crazy. So there's probably a pretty good amount of liquidity right here, just hanging out right at another demand zone. Anytime liquidity matches up with a demand, it's just beautiful. Now, I prefer my zone to be just a little lower like this so that they can sweep that liquidity a little deeper and then touch my zone. But this one just so happens to be in the zone, which means I personally would just probably increase my stop loss a little bit rather than trying to choke it out, right below. Probably just give it a little more wiggle room. Because if I'm a bank and I'm trying to collect collect sell orders to fuel my buy orders, and obviously the unfilled orders from the zone, we don't know how far down they're going to want to sweep it before they reverse price. Okay, again, this is what used to kill me, guys. I'd have my stop losses too tight, and I would become the liquidity, and then price would go in my favor. So that's one big change I made, is just simply widen my stop loss and not being so damn stubborn about a 3-to-1 reward risk minimum every time, and allowing myself to do 2-to-1 reward risks. So I could widen my stop loss, stay in a few more trades, and then I can play the whole game of, raising stop losses if I want, raise my profit target, and so on and so forth. That single-handedly, and I know I touched on this a few weeks ago, that single-handedly improved my win rate by a ton. And morale, because Nick says it all the time, right? Like Nick's a great example. Nick goes for the home runs. He has a lot of small losses, and they kind of stack up, right? And then when he gets his bigger wins, a la gold at the start of the year, right? When he had his 90K, whatever it was, I think it was 90K win. Clearly that's going to make up for all the losses, a lot of the smaller losses he accumulates. So there's two types of traders. There's traders that can handle all the small losses, and there's traders that just want to see maybe the win percentage raised just a little bit higher. I've always been that 3-to-1, but I just, we all go through spells. We have all went through spells and streaks. I went through a streak towards the early part of the year, like a lot of traders do. And I started having a few more losses than I was appreciative of. Okay. So I widened my stop losses. I moved from a 3-to-1 to a 2-to-1. The wins came back. The morale gets boosted. The confidence comes back. We all go through this cycle, guys. So that's just a very simple way, in my opinion, to kind of pull you out of a funk, which we all inevitably will fall into at some point, is just don't be so damn picky like me. And that was my simple way of changing it, was 3-to-1 to 2-to-1. What we got up here? I'm along on pound dollar. Oh, there's Andrea. There you are, Andrea. I knew you'd be showing up. But I'm going to buy more on the pullback. Yeah, back to pound dollar. Yeah, exactly. Well, if you come out of that area, I'll probably join that trade with you. As always, not financial advice. But yeah, I'm definitely going to stick to that green demand zone I drew up there. Are retail stop losses that liquid? Excuse me. Are retail stop losses, says Asmo Finance, are retail stop losses that liquid that big players can utilize it to collect liquidity? I keep hearing retail is negligible in volume. Yeah, no, it's like a hot take. There's two sides of the story to it. I'm not looking for that specific. I'm not looking for that retail volume specifically for my trades. Talking about those stop losses that we're talking about. That's just every little bit helps. Every little bit counts, guys. When you get a break of structure like this, what are traders on smaller time frames doing? They're looking at saying, oh, wow, right? 1 hour time frame, lower lows, lower highs. Oh, wait, all of a sudden now we're breaking to the upside. We must be reversing. What do traders often do, especially on the smaller time frames? They try to catch falling knives. So what to them, because they're on the smaller time frames, looks like they're catching a falling knife, which they are, looks a little different to me because I'm on a higher time frame, right? I'm paying attention to the higher time frame structure. So when price does come down, I'm essentially, if you stop and think about it, doing a counter trend trade on a smaller time frame. But I'm looking at it in context of the higher time frame. So, but yeah, that's just the way the game is played, man. Whenever this changes character like it did, this will inevitably suck in breakout buyers just because it broke this structure right here. And when it does that, they've got to put their stop losses somewhere. So they'll very likely put it underneath the most recent swing low. And I get to utilize it for free to add in with the institutional volume that I trade, that a supply and demand trader trades. If this didn't exist, I'd be okay. All I'm saying is this adds just a little bit more liquidity to the system that the banks can definitely utilize, because they started this. Keep that in mind, guys. They started this. These strong supply and demand zones. I look. There's a lot of zones out there, but I'm not looking for every single zone. I'm just looking for the zones that broke structures, that are cheap relative to the most recent major swing low and swing high. And when you get a strong gap with a lot of liquidity, that shows institutional type volume. Okay. So a lot of times a big bank, an institution, or a collection of them, if they start this, a lot of times they can't even fulfill their full order. They can't accumulate fast enough. Price runs away from them. So if and when price returns, that's where they can either add more order to it, accumulate more, or just fulfill the rest of their order. Because there's going to be liquidity there. There's going to be unfilled orders. They put in a whole bunch of orders, they only get a partial fill. So yeah, you're right. By itself, in other words, if there were no demand zone over here, that's no trade. I'm not going to trade just because there's stop losses here. I'm only doing it if there's a institutional type demand zone. Okay. If I had one item I could use on a chart and there was no other indicators, nothing that I could use, I would choose the demand zone itself. A naked chart, just give me a demand zone, which the beautiful thing is you don't even need to necessarily draw anything up. So hope that makes sense. The liquidity is just a nice additive. It's the cherry on top. Okay. Ice cream is great, but when you put whipped cream or chocolate syrup on it, that's the retail volume. Nasdaq. Yeah. And then I got oh gosh, dang. I swear, guys, these fly by. All right, let's take a quick look at Nasdaq, and then we'll get out of here. It's already been 30 minutes. My goodness. Is that right? Yeah, 30 minutes. Okay. Nasdaq. Yeah, let's go over here. Yeah, as far as Edge Finder goes, did that pop onto our list? I haven't even updated it lately since I just got out of that meeting. No, it looks like we're still neutral. Okay. So we'll just give you a quick technical look. Okay, on a daily, we are rolling over now. Okay, we had a strong uptrend. We had an 8 above our 21. It got choppy right in this area, and then we started to roll over. Now we've broken through a demand zone. I had a daily demand drawn up. Daily demand right here. Now this was more of a minor one. Here's the thing, and I'll end it on this. We're high on the curve because I took my curve analysis from this major swing low that started all the way back at the end of March to this major swing high, which basically was June 3rd. So this is a strong impulse move because it broke all this nonsense over here and kept going. So that's quite a strong move. But now we're in the middle, or well, basically, I guess we are technically right there in the upper end, just barely. So if you're only looking at this from a technical level only, I'd be looking for a short here. But I just don't have enough data giving me a clear signal over here. I mean, what does Nasdaq say over here? Let's go to see Nasdaq. Yeah, straight up neutral. So obviously the technicals have turned around. The data has obviously been going south because of the USD data we've gotten. But we did have, it looks like a little bit of a combination of either accumulation from the banks / the average retail trader is actually bearish. So we may be on the wrong side of the trade with the retail traders, but it is a straight up zero. I just need more data. But yeah, if you were to just say, hey, you only have a technical chart, well, clearly we've got a possible supply zone we could be short in. But don't take this with a grain of salt, because this is, again, just the technical look. Okay. Clearly that's a 4-hour supply zone right at a former major swing low from back here. That's why you got that blue dash line. So it also chewed through this daily demand. Okay. So it's don't utilize that as a signal by any means, because we are pretty well neutral on the data, and clearly the smart money, dumb money conversation is in line with the bullish side. So anyway, that's about all I got, guys. Hope you learned something. And yeah, we'll be back tomorrow. So stay safe out there, guys. Get ready for Friday. And yeah, we'll do it all over again. Take care, everybody.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.